help us shaping our policy and making our regulatory and supervisory approaches smarter and even more consumer-centric. Protection of consumers, investors and policyholders is a high priority for each of the European supervisory authorities. The list of accomplishments of the EBA, EIOPA and ESMA individually, but also jointly, is already, I would say, long and impressive. Since the foundation, the ESAs have been playing a leading role in promoting transparency, simplicity and fairness towards consumer financial products and services across the internal market. We took proactive approaches in order to restore trust in the financial sector by ensuring that consumers are adequately protected from the risk of detriment. We have worked on addressing the demand for greater transparency, comparability and integrity of companies and their financial products, because this is a demand of all of us, the consumers, who are becoming, of course, more and more aware of their rights and obligations, something which is central to the mandate of the three European supervisory authorities. In the context of the Joint Committee, the biggest challenge for all of us is, of course, continuously ensure consistency across all the financial sectors while respecting the inherent specificities of each one of the sectors. Having worked at the level of Joint Committee for more than 5 years, I can testify that we went through some challenging moments, having sometimes really tough discussions between the experts in London, in Frankfurt and in Paris. But as Socrates said, truth is born in arguments. We had to grow out of our strong arguments to find the common language and understanding and to learn profiting from each other's expertise. It worked out. We managed well to reach our common goals, to enhance consumer protection and to contribute to the establishment of legitimate practices and fair products for the whole European financial sector. Today, during our 4th Joint Consumer Protection Day, we would like to focus our discussions on 3 strategic objectives set by the European Supervisory Authorities Joint Committee. First one, to set up a risk-based approach towards the identification of consumer protection issues, their depth and scale. Second, to monitor digitalization of financial services and tackle possible negative impacts on consumers. Third, to ensure consistent implementation of consumer protection requirements across the EU. The 3 panel discussions of today's conference will cover these objectives. Let me touch briefly on each one of them. The first panel is dedicated to the development of a European market for retail financial services. The ESAs have been working on different advices, different technical elements related to the EU Mortgage Credit Directive, Payments Accounts Directive, Insurance Distribution Directive, and the Markets in Financial Instruments Directive. But besides talking about the work already done, today we will discuss how these directives can achieve an integrated single market and what the ESAs could do to realize the potential of the European single market for consumers. Our second panel discussion is dedicated to a highly relevant issue, big data in the financial sector. Big data can be revolutionary for the way products and services are designed and marketed. At the same time, it can create cases of unfair treatment of certain consumer segments. Adequate regulatory measures for big data are of utmost importance to protect consumers. Our panelists are going to argue which measures are required for a better consumer protection and which role could the regulators play in ensuring the legitimate use of big data by financial companies and using good innovation for consumers. Our final panel will be focused on the supervision of consumer protection requirements in the European Union. ensuring supervisory convergence across the board. One requirement is the milestone delivered by the Joint Committee this year, the regulatory technical standards on the key information documents for the packaged retail investment, insurance investment products, PRIPS. Let me be very clear, we are proud of our work in this area, and we believe that it demonstrates how the three ESAs managed to transform high-level EU legislative principles in a very difficult and challenging area into a set of practical cross-sectoral rules representing a quantum leap in the interest of better consumer protection. As a result, we propose a three-page document that for the first time will provide retail investors with simple and comparable information on costs, risks, and performance of investment products across the banking, insurance, and security sectors. Again, we believe that this is a major step forward for consumers. We understand the concerns raised by the European Parliament in their motion, and we believe that the work that we have been developing by the Joint Committee on guidance on the implementation of the KID can be of great help to adjust and clarify some provisions of the RTS in order to overcome those concerns. I'm confident that a robust and pragmatic solution will be found soon for the benefit of EU consumers. But during this panel, we will talk also about what the ESAs should further do to effectively enforce the implementation of the KIDs, as well as other provisions such as the product oversight and governance arrangements, remuneration, and many other issues. To conclude my welcome address, on behalf of the Joint Committee of the three ESAs, I would like to assure you that we are, as ever, fully committed to develop preventive supervision which contributes to healthy market competition, avoids consumer detriment, and further builds public confidence in the financial markets. Supervisory convergence, including in the conduct of business area, is a clear priority for all of the three ESAs. We still have a fragmented landscape with important differences in the culture and the practices of supervision in the EU member states. We need to recognize that. But we are working hard, making use of the tools that are granted to us by the current ESAs regulation. And we look forward to the review of these regulations in order to reinforce the framework and the role of the ESAs to ensure a common supervisory approach in all the European Union. Ladies and gentlemen, I'm delighted to see such a large interest in this event from representatives of consumers, industry, national supervisors, and various other stakeholders. I'm also delighted to have an excellent list of panelists who have, I would say, everything that is necessary for an interesting conversation and dialogue. We have lots of knowledge around, and I'm sure we also have strong positions and strong arguments, which is fantastic for a good discussion. I am confident that the contributions and discussions at today's conference will inspire each one of us for new achievements in the interest of consumers of financial products. Like President Juncker said 2 days ago, our European Union is, at least in part, in an existential crisis. We all should work together to deliver to the European citizens the next step on building a strong European Union. And I strongly believe that we can, together, deliver much more tangible outcomes for consumers. That is something that at the ESAs we are very committed to do, and we want to involve all of you in this progress that we need to do collectively. Thank you for your attention, and I wish you a very interesting fourth Consumer Day. Thank you very much. And without delay, I would like now to give the floor, and of course it's my privilege and it's an honor to have with us Olivier Gersin, Director General at the Directorate for Financial Stability, Financial Services and the Capital Markets Union of the Commission. Olivier is someone that has been always, for many years, very close to us and to the issues on consumer protection. So, Olivier, very welcome to you in this day.
Merci, Gabriel. I take the opportunity that I'm in Paris to say 2 words in French. It's always good to be back in Paris. I started my career here in the French Ministry of Finance, so it leads you everywhere if you manage to get out of it. This event is important. It's important to bring together consumer representatives, academics, regulators, experts, members of the financial services industry, and to discuss the issues that impacts consumers and investors, in particular retail investors. It is important that the ESAs, the European supervisory authorities, fully engage with all participants in the financial services across Europe, and I know this is very much what each of you three are doing. It is important because this is how we can better understand the unique features of Europe's consumers and investors and the real-world consequences of what we're doing every day. This type of dialogue can only make the ESAs more effective in their role and better able to protect consumers and investors. And because I have a number of colleagues from the Commission in the room, it can also make the Commission more effective in that respect. You were kind enough, Gabriel, to mention that in my career I had a number of first-hand experience in promoting positive outcomes for consumers. I've been spending 20 years of my life doing competition policy. And whether through competition policy or through financial regulation, I have the firm conviction that our actions should be aimed at achieving the best outcomes for consumers. This not only brings consumers and investors the widest possible range of informed choices at the lowest possible price, but it promotes efficiency, it promotes stability, and it helps to create positive outcomes for the supply side, for financial institutions as well. So today, I want to first focus on what we have delivered, what we have achieved, but also what we still need to do. So I will then try to tackle what I see as the new challenges, including our approach to the use of big data, fintechs, and this type of issue. And I want to finish off with some thoughts on how we ensure that our rules are applied in a way that leads to consistent and coherent outcomes. The rules we all have contributed to put in place over the last years were intended to achieve 2 outcomes: improve consumer outcomes, but also promote financial stability. And most of the time, one and the other are going hand in hand. For example, by building trust and helping consumers to make informed choices through increased transparency requirements before the sale of a number of financial products such as payment accounts, mortgages, consumer credit, investment products, and of course, insurance. Also by promoting a wider choice and improving cross-border access to basic financial services. The ESAs have played a key role, and they will continue to do so, in supporting the implementation of these new requirements, in particular, for example, those that relate to payment accounts, mortgages, or consumer credits. And we in the Commission are both impressed and grateful for the top quality of the technical advice we receive, usually under insane deadlines. In the field of retail financial products, the EBA, for example, has developed a number of guidelines to protect consumers better. I would like, in particular, to mention the EBA guidelines issued in the area of mortgages, which we see as specifically important and useful. It is a very good example of a document that offers a clear benefit to consumers and constitutes also a perfect supplement and complement to Level 1 text. In insurance, well, you all know that insurance is a market characterized by complex products. My first job was in a French life insurance company. I left after 6 months because I was not understanding what they were doing. And there are a number of information problems and consumer biases in that field, potentially at least. This limits the choice between insurance contracts and the benefits of competition for consumers. Of particular concern are the transparency and the comparability of insurance products, as well as their still limited cross-border uptake. So that's the reason why I think it's important to highlight EIOPA's ongoing consultation on technical advice and implementing legislation in relation to what we call IMD, the Insurance Distribution Directive. It's a very important directive, which we expect to significantly enhance the information requirements regarding insurance product across the various distribution channels for the protection of insurance policyholders. Pensions is a very topical area as well. It's important both from an investment saving point of view, financial stability, and also, of course, consumer protection. Here as well, we have updated previous rules, and here as well, there are a number of things still remaining to do in the field, for example, of personal pension products. And the new rules that relate to the activities and supervision of IOPs, institutions for occupational requirements, so-called IOP 2, we expect them to make it easier for pension funds to invest in long-term assets, to strengthen their role that they can play in the building of a genuine capital market of European dimension, a project that we call Capital Market Union. But importantly, it will also improve the governance of pension funds. It will also improve the way they're managing their risks. It will also provide consumers and investors alike with choice by making it easier for pension funds to conduct cross-border business and create trust by improving information flows to pension scheme members and beneficiaries. If I turn to market now in the area of investment services, MiFID II has profoundly upgraded the rules aimed at protecting investors in the context of the provision of investment services. MiFID addresses all aspects of the relationship between investment firm and investors, and this across the full range of services, from execution-only services to investment advice and discretionary portfolio management. Here, ESMA has been an admirable partner in all the work on the delegated act. I tell you, it was a hell of a work under, again, very, very tight deadlines. So, our past joint efforts are paying off. Last week, on the 5th of September, the Commission has published its 2016 Consumer Markets Scoreboard. That's very interesting. It monitors the EU consumers' rating of how good and services market work. And this year's ratings shows that consumer-friendly rules, market reforms, and effective enforcement of consumer rules have made consumers more confident in the markets. More interestingly, even for this audience, the financial services marketplace is showing the biggest rate of progress of all areas of business. So consumers have more trust in their banks, they have more trust in their pension funds and investment funds than they had before. And that, I think, is thanks to the considerable work of refundation of the regulatory framework for financial services that the Commission and the ESAs have been engaged in over the last 6 years. This is a very important development, and I think we should be proud of our work, we should be proud of our efforts, and today offers me a good opportunity to publicly thank all three ESAs and their chairpersons for the work they have done. However, knock on the bad news, the work is not finished. The work is never finished. The financial services market still remains in the lowest performing market cluster in the scoreboard rating. So we are the fastest improving, but we are at the bottom end. People still do not love their bankers. I'm sorry for the bankers in the room. I suspect they don't love anymore their insurers. Probably not the regulators either. There is therefore significant for improvement for all of us. We have a big scope for improvement. We must deliver more. We must deliver better for consumers. Switching provider remains difficult, in particular in the mortgages market, but also in the market for investment products, private pensions. Try to move your private pension from one fund to the other. Securities. There is a big work ahead of us. And there seems to be unmet demand for more choice to be made available among service providers. The detriment experienced by consumers when a problem occurs in insurance, for example, is very, very high. There is a high incidence of consumer vulnerability in the financial services in general, where the complexity of offers and contract terms is very often a challenge for many. So results from the scoreboards also show, and that I turn now to the private market players in this room, the results from the scoreboard also show a lack of compliance by businesses. So all of this therefore underscores the importance that the EU financial services legislation is effectively enforced. And I have to say, this is a big focus of my Directorate General. For long we've been a legislator. We want to do less legislation. We want to provide the market for visibility and stability on the basis of a stable regulatory framework. We want to fix only what doesn't work, but we want to implement and enforce what is in place. And that is going to be one of the main focus of the Juncker's Commission. And in enforcement term, the ESAs as well as member states have a very important role to play going forward. Not only as they do in protecting the interests of consumers in supervisory and regulatory work, but also as partners in ensuring that our legislation is properly implemented and well enforced. Enforcement and awareness-raising efforts are areas where the ESAs are particularly well placed to increase their efforts. The findings in the scoreboard underline the importance of continuing putting consumers and investors at the forefront of our work. And they are fully in line with our strategic choice to put consumers and investors' choice and protection at the heart of our work. If I now turn to Capital Market Union that I referred to a moment ago, I would like to echo the message that Gabrielle gave a few minutes ago, that we are working at full speed to ensure that the regulation on packaged retail and insurance-based investment products, better known as PRIPS, and the provisions relating to the key information documents will be in place as soon as practically possible. It is a very important piece of legislation. It is very important for consumer and investor protection. It is absolutely essential to ensure comparability of investment products for retail investors. So a few days after the European Parliament has rejected the regulatory technical standards of PRIPS that had been carefully prepared by the three ESAs, carefully considered by the Commission, I want to be clear, the Commission found and still find that this RTS was fully compliant with level 1 and finding the right balance. This said, it is of course the full right of the Parliament to reject RTS, especially when it does it with a majority of 98%. We should once investigate how they reached that. And we are currently studying very carefully the motives for this rejection. We believe we can address the concerns. We believe these concerns could have been addressed in level 3, sorry. So they certainly can be addressed as an improved level 2, and as soon as we will come to conclusions on what should be addressed, we will ask the ESAs to, as quickly as possible, complete their work and resubmit the draft RTS for adoption. Several other important CMU work strands also aim at providing better opportunities for retail investors. At the end of the day, a large part of the Capital Market Union project is about providing more opportunities for retail investors and consumers and increase their confidence to participate in capital market. For example, we're currently undertaking a comprehensive assessment of retail investment markets because we want to understand the distribution systems of retail investment products, including how fees and charges on these products impact investor participation. Our goal here is to see how we can increase retail investor engagement and protection. Because without retail investors, the reservoir of funds to fuel corporate debt and equity is very unlikely to develop sufficiently in Europe. We intend to formulate policy remedies by 2018. We are also working on opening up the European market for retail financial services. My colleague Olivier Salès, who is in the room and will speak later today, is very busy trying to develop an action plan that we plan to present by the end of this year. This action plan will also strengthen retail investor participation in capital markets. Further initiatives we are reflecting on include increasing transparency, for example, for fees charged for cross-border transactions. I think we have a very successful example with SEPA in the area of banking. We should think about it and try to see whether we can replicate that success in other fields. Stimulating competition, raising awareness on cross-border offers, for example, through comparison websites, improving cooperation to provide consumers with easy access to out-of-court complaint procedures and settlement. We think about using, for example, FinNet for that purpose. In certain segments, the creation of pan-European products might also contribute to build up a more integrated market to the benefit of consumers. And the key example here is pensions. Clearly, these are areas where we see ample scope for the ESAs to be involved going forward, interacting with national consumer protection agencies, interacting with the Commission and with stakeholder groups. One of the important issues being addressed at today's event is big data. And big data is a specific issue in the financial sector. It's a much broader issue, but it's an issue in the financial sector in particular. And it can be defined as high volume, high velocity, and high variety information assets. Veracity is now being added by some organizations to emphasize the importance of data integrity and quality, as well as the ability to trust the data while taking critical business definitions. Big data is not a new concept, and it's not a new concept in fintech in particular. The growth in data or data explosion is a function of multiple technology advancements, adoption of cloud, mobile technologies, apps, wearable devices, intelligent networks, internet penetration. I mean, today I'm hardly ever putting a 2 in my bank because I'm doing all my banking from my mobile phone. Hope it's secure. So the world is changing, and the world is changing very quickly. The technology innovation sector and the financial services sector are among our most valuable assets. They're a key driver for improving our competitive position worldwide, but also improving the quality of services we give consumers. And both are key priorities to enable Europe to support growth and competitiveness. And it is clear that these sectors are more and more interdependent as the financial services sector increasingly depends on technologies and innovation for banking, for corporate finance, for capital markets, financial data, analytics, payments, personal financial management, as I just mentioned. In the world of information technology, data is becoming the new oil. We see several sectors where new solution leveraging big data is used to reshape markets. For example, lending and credit scoring, insurance underwriting, customer acquisition, marketing, customer retention, loyalty programs, risk management, investment management, name it. Clearly, there are benefits of financial institutions using the data available to them more intelligently, more quickly. Using data available to banks to identify and interrogate cyber threats and share this information with other financial institutions and authorities to raise standards and sector resilience creates significant positive outcomes to the society as a whole. It helps combat financial crime. It helps improving our collective security. And there may be consumer benefits too in the field of innovation. If big data supports development in fintech and in terms of financial institutions intelligently, tailoring financial products to consumer needs, for example. There are some studies that show that big and granular data on individuals' behavior can lead to financial services becoming more inclusive. Better data can allow banks, for example, to extend credit to groups with atypical credit histories. In China, you have a very small software that shop holders run, and that define creditworthiness of the consumer on the basis of its internet profile. It takes 20 minutes. The rate of default of the loans, so first of all, they processed 32 million loans in 2015. Was this? It's not bad. Rate of default less than 0.14. Impossible to do in Europe because of data protection. Maybe it's good, maybe it's not. I mean, there is a balance between privacy and the benefits that the use of big data can come with. And it's for each society to define where it wants to put that balance. So there are opportunities and there are risks with big data. Big data strategies may also harm consumers because information is misused by the financial sector, or lead to exclusion rather than inclusiveness, for example. So the big choices are choices for our legislators, but the small choices are for us. Among the small choices, what do you do with these nascent activities? Do you force them into the current regulatory framework? Do you create a framework of its own? Do you observe them and wait for them to be big and or dangerous enough to do something about it, to the risk of being too late? Well, the traditional view of a regulator's role in innovation is basically to stay out of the way and don't try to pick winners for as long as it's possible and then regulate when the market becomes big enough. That's another way of giving more choice to consumers to enable them to pick the winners, make the choices, encourage innovation to create value in financial services. So that is why we are looking at the regulatory sandboxes approach with a great interest, but regulatory sandboxes in a European context is challenging because it's national. Supervision remains national for the bulk of our activities. That may change more or less quickly, but for the time being, this is the world we are in. So we think we should dedicate a bit of thoughts to how we can have a sound regulatory sandbox approach in Europe that allows markets to develop, that allows innovation to flourish, that allows those companies that innovate to go across borders in the single market while being consistent with our framework. And here as well, it's mainly a coordination between supervisors issues, so there is a big role for the ESAs to play. We will focus on a number of priorities, including regulatory and supervisory innovation and convergence, outsourcing and cloud frameworks, distributed ledger technology. The Parliament is contemplating the possibility to vote pilot action in that field. Data-related policies, cybersecurity and operational risk. A better understanding of the risks and potential with these topics will be absolutely crucial to help us determine the shape and direction of the future financial services policy. But treading the line between keeping customers safe and encouraging financial innovation is going to be a difficult battle. And here as well, the ESAs have an important role to play, especially within the Joint Committee, looking into new trends, innovation, use of big data in fintech and other developments in the retail financial services market. As we make ourselves ready to think about new challenges, we cannot lose sight of ensuring that new and pending legislation is properly implemented. I'm sorry to come back on this. That's a bit of my motto these days. The best regulation is nothing if it's not properly enforced. So having level 1 rules that protect consumers and investors is good. Having them applied consistently in a harmonized way across the still 28 member states is even better. This is why we believe that enhanced supervisory convergence is one of the key ingredients to strengthen investors' trust in the capital markets. It is a key part of the capital markets union, and this is why, if you read carefully the communication of the Commission of this week on Capital Market Union, you will see that this is an important part of what we want, where we want to press ahead with the Capital Market Union project. Supervisory convergence is all the more needed as we can see the increase in marketing and distribution of certain investment products by investment firms across border. I mean, we have to be consistent. We want to promote the take-up of cross-border investment products. Therefore, we have to promote an increased convergence in supervision and maybe one day a single supervisor. So, more integrated market, better converging supervision, that would be good news from a single market perspective, but also for the consumers. Yet sometimes the products are highly risky. They are marketed aggressively online, for example, and the rules that protect investors, for example, the principle that information addressed to clients should be fair, clear, and not misleading, are not always adequately applied. This creates challenges for proper supervision, and this is taking significant proportions as complaints accumulate from EU consumers who have lost significant amounts of money after investing in exotic products like binary options, contract for differences, so-called CFDs, or rolling spot forex contracts. This is why I very welcome ESMA's initiative in this field, including its recent warning in July of this year on some of these exotic products, in particular CFDs and binary options. We fully supported the Commission, the efforts of ESMA to promote further convergence among NCAs with regard to the supervision of online business models of investment firms which operate on a cross-border basis. It's absolutely essential. We can kill the market if we don't do this, because if consumer confidence disappears, this market will be killed for a very long time. As with many other issues, an active cooperation among home and host national supervisory agencies is essential. I know that ESMA in particular has achieved several concrete results in this area. I know that both Gabrielle and Andrea are very hardly working in trying to put their ships together in a better way as good shepherds. But for example, in relation to the Cyprus task force, an issue that we know well in the Commission, the task force that ESMA set up in mid-2015, comprising a number of host NCAs on the Cyprus Securities and Exchange Commission in order to try to solve a number of issues. We want to see more of these initiatives when appropriate. MiFID and PRIPS are coming on stream to give consumers more protection. And there are clearly changes ahead in that respect that include NCAs and the ESAs using their product intervention powers wisely and in a way that ensures a consistent outcome. So I'm sure we will see a lively debate today on how to achieve better and consistent outcomes going forward. I want to conclude here by telling you that, as I hope you could see from these remarks, there is still a lot to do. There is still a lot we need to deliver if we want to keep financial services focused on consumers, creating growth and creating jobs. I hope, I know, that the ESAs will prioritize wisely and take their protection mandate seriously in the future as they did in the past. And as I said in the beginning, this will not only bring consumers the widest possible range of choices at the lowest possible price, but it will also promote efficiency, better allocation of capital, and a better stability for our market. All this will help creating positive outcomes for Europe as a whole. If we maintain this in our focus, I'm certain we'll make the best of progress. Have a good day of discussions, and thank you very much.
Sorry. Hello, yeah. Hi, how are you doing? Please. Please go ahead. Thank you.
Je reste un peu, tu parles bientôt. D'accord. Bon, bah, bravo, c'est bien.
Anna Moreau, nice to meet you. Hello, nice to see you.
This is switched off. Good morning, ladies and gentlemen, and welcome also from my side to the Consumer Protection Day 2016. After these very interesting words from Olivier Garcin, for which I want to thank him again, we are now starting on the first panel discussion of the day, and it's on a topic which I'm sure is of interest to all of us. It's about the state of the European retail market for financial services. The topic is relevant for all of us in many different ways. First of all, because it's a hot topic for the European institutions, and as Olivier Garcin already mentioned, is something that the Commission, but also the Parliament and the Council are very focused on. Secondly, it's a topic that relates directly to consumer protection, and that is a subject that, as Gabriel has also emphasized, is really central and to the core of the three ESAs. Consumer protection has been a key driver of our efforts in contributing to put together the single rulebook, and now as we are moving to implementation and supervisory convergence work, it will remain a key focus and a key central plank to all that we are doing in the three ESAs. The ESA's focus is increasingly shifting, and I think Olivier and Gabriel both emphasized that, from the initial rulemaking to now making sure that there's genuine supervisory convergence in the implementation, supervision, and very importantly, as emphasized, the enforcement of the common EU rules. We will discuss at length some of that later on this afternoon. Thirdly, the topic of the retail financial markets is important and interesting because it relates really to the founding plank of the European Union and the treaties. The establishment of a single market is important not only for the European economies, but also for the European consumers, who through the integration are expected, notably thanks to enhanced competition, to be provided with wider, better and more affordable range of goods and services. So that's why we believe this panel was very relevant and very important to touch on this subject today. When considering the single market for financial services, one has to make a distinction between the professional market, which is already very widely integrated across Europe, and the retail financial services market, which is clearly less integrated. And if you just look at some of the statistics, 94% of Europeans have said that they never bought a financial product outside of their own country. And why is that? Is that confidence by the consumer in what is happening outside of their own country? Is it the difficulty of access? Is it language? Is it regulatory barriers? That's the type of topics I would like to touch on today. And this discussion will take place, obviously trying to focus on some of the key questions that are arising in this area. Where are we in terms of establishing a genuine retail financial services market in the EU? Is it a dream, or are we gradually moving in the right direction? What are the things that are hampering it from taking place? How can we regain some of the confidence in the consumer? Olivier indicated this is slightly improving maybe, but clearly in financial services it's still at the very bottom. So how can we make this happen over time? And to discuss all of those issues, I've got a very good set of panelists with me who will help us to debate some of those issues. And let me very briefly introduce them. So first of all, we have Sophie in 't Veld. She has been a member of the European Parliament since 2004 and has been very active, particularly on retail financial services issues in the Econ Committee. And so she is someone who has looked in the Econ Committee particularly at some of the issues around retail financial services. Then we have here directly to my left Olivier Salès from the Commission. He is the head of Unit D3, which will mean a lot to very few people, but it basically means that he's responsible for retail financial services. And prior to taking up his role last year, he has been involved across the Commission in a variety of different roles, including actually in the setup of the three ESAs at the very beginning. Then we have next to him Niels Lemmers. He is a consumer representative. he basically is a representative of the VEB, which is one of the largest consumer organizations in the Netherlands, and has also been part of launching the European Investors Association. And he's a member of the ESMA Working Group on Consumer Protection as well. Equally, Alain Moreau, at the very end here of the panel, he is the global head of investment products and insurance for Deutsche Bank, and in addition is also the country chief executive officer for Belgium for Deutsche Bank. So those are the 4 panelists who I would like to welcome very warmly with that introduction. Obviously, we couldn't put the whole range of stakeholders onto the panel, so I'm very conscious there are people in the audience from different and other walks of life, and we're very interested in making this as open a discussion as we can. So I'm hoping to also be able to collect some questions from the audience as we go along. We are also having the opportunity to use a live voting system, so you will have found on your tables a little voting device, and so you will see that throughout the day we will from time to time ask you questions and see the reaction of the audience, which will hopefully then inspire further discussions in the various panels. And with that introduction, let me now move to actually starting the panel, and thank you once again to the 4 panelists for being here with us today. And I might start, given it's the Consumer Protection Day after all, with the consumer representative on this panel. So Niels, can I maybe ask with you the question of what you believe the current status of the integration of the European retail financial services markets is, and how it does in ensuring sufficient consumer protection?
Well, thank you, Verena, for putting this very difficult question up with me first. Also, thank you to the ESAs that consumer representatives are now represented in all 3 of the panels, which I think is a very good sign that me and my fellow representative of consumers and investors are actually also taking stand and come up for the interests that we represent. I mean, we have to be the voice of our constituents, and that's why we're here. Mr. Saul, next to me, has opened a consultation on UCITS distribution, funds distribution, and we took that incentive for a survey. And I would like to start with that, some of the results of that survey to show how our constituents, so active retail investors, are looking at that cross-border functioning of the markets. So how is the distribution going on? What are exactly factors when they buy investment products? But first, let me be very specific. We ask our members, so the members from VEB and European investors, very targeted 4,000 people who registered with us, so they are active retail investors. Those are people that know that they can buy things from institutionals, that they need advice sometimes. These are people that acknowledge that they are an investor. So they are more than just a financial consumer. Let's take that very much in mind if you look at the numbers. Can I put up the first slide, please? Well, people who know me from IPISC, CBG, you might know that I'm very happy with the first point, that 85% of the people are now looking at costs and charges. So we did something for financial literacy, that people understand that costs and charges is very important, and that transparency on that is also very important. On the question, before this question, did you ever bought a fund outside your home market? 50%, a little bit more 50% said, yes, I did. But also 36% said, I tried, but it didn't work out. So there is still very much room to improvement. Other responses are listed here, and in the light of the discussions about PRIPS, you take a look at the third point. It's very important for consumers and investors that they know about past performances. Some specific that might also be interested to think about if you're talking about a single, genuine European market for financial services, is the last point. It's only 15%, but people are really feeling problems on the tax level. How do I reclaim? How do I refund? Where do I need to go? Is somebody helping me? If you put up the second slide, please. And we ask, what are you using? What are you using for information source? And this one also really astonished myself, because I'm advocating for 10 years now on key information documents, on prospectuses, on all sort of things. And my constituents tells me, yeah, well, most of the times I'm using commercial ads by decision making. Okay. Maybe we have to take this as a starting point for new discussions. Maybe we should say, should we, in one way or another, regulate non-regulated information? I have some thoughts about that, maybe come that later, but it's something that might interest you as well. The second question we put up here is, did you really receive the key IID? And of course, it can be that people did forgot that they ever had received it. But mentioning it, that half of it said, I don't know. I think not, because otherwise I would have remembered. And the last one is also about marketing and commercial materials. Do you want that to be regulated? And an astonishing almost 90% says, please do. Please do. And they did, and you know, we had those little boxes where people could add some extras. And the two most important reasons, and I want to share that with you, the first one is, can I trust this information? So people are lacking confidence if the advertisable material is trustworthy. And the second most mentioned point was, could a regulator please see if the regulated information is aligned with the materials that are in newspapers? So not about, is it true, but is it consistent? So maybe that's the first point that you can take up thinking about this. I will stop here and I'll come back to it later with some other points, but I'm hoping that I have brought some first impressions to the discussion.
Thank you very much, Niels. Very interesting, and in particularly some of the perceptions. Obviously a small sample, and as you said, of probably quite sophisticated investors already, or at least active investors, but still interesting to hear some of that feedback from that audience. Alain, may I maybe turn to you to ask you, I mean, you are obviously marketing and selling products across the whole of Europe, across the different sectors as well as Deutsche Bank. How do you see the state of the European retail financial market? Is it a genuine retail financial market? What does it look like from the industry perspective?
Good. Thank you for having invited me. It has always been very important for us to have a very constructive dialogue with the different ESAs and with the Commission. And we really support all the work that has been done and appreciate all the improvements that we have seen over the last years. And certainly going forward with the new regulations that will be implemented. But from my perspective, I would say there is a but. There is a strong but. Is that what I see in the different countries we are interacting with retail customers in 6 different countries across Europe. And what I see in some instances, many instances, is that we are probably not going in the right direction. And because of that, it prevents us to be fully efficient and to serve our customers the way we would like to do that. And let me give you maybe some examples. Probably I would start with a warning. You know that we bankers, we like warnings. Yes, warnings. So I will start with one. You know, I've been asked to be very specific, so I will mention a few countries, a few regulations. So don't take it personally. You know, it's just that I had to give some examples. And I would start with my home country, or not my home country, but at least the home country of my bank in Germany. And those examples are related to what I call extraterritoriality. For example, what we have recently seen is that more and more they are pushing regulations across borders. In this case, this is mainly organizational requirements that they are pushing through, and there is a kind of a discrimination, pushing through branches, not to subsidiaries, because with branches you have the same legal entity. So we are now being forced to implement specific requirements, be it in the registration of sales advisory with the BaFin, or specific training requirements, complaint management for all the German residents, for example. We see the same issue with Ireland or with Spain. Spain, I think it was end of last year, beginning of this year, they are also requiring, and here there is no discrimination between subsidiaries and branches. For all the Spanish residents, we need to provide specific documents for all the products that were not covered by either PRIPS or UCIT. For example, equities, bonds, saving accounts. You need then to provide specific documents. But what does that mean? And it's a bit intriguing for us, is that in a world where people are more and more mobile, so you can start to interact. You know, let's take an example. You have a branch here in France, in Paris. You would onboard a customer that is a French resident, and then he would move to Berlin, or he would move to Madrid, and automatically then you would fall under those extraterritoriality requirements. So difficult to follow. It's highly risky for us. And then the question I'm asking myself, what should we do? Should we basically stop servicing those customers? Because then it's risky. You need to follow all regulations across Europe. Or should you change your pricing model? Because the cost to serve is more expensive. So we see that by kind of gold plating, having some specific local regulations, at the end of the day, this becomes detrimental for consumers because we are less efficient. So they will get less choice and probably higher prices. Second examples that I could mention are the classical one, also linked to consumer protection, KYC. We have very different requirements around KYC. Tax. It's saving accounts, for example. You have very different requirements in all the countries. So basically, you cannot export your products because they are different from one country to the other. Funds, you already mentioned that. You know, we see that it's still very fragmented. That's one of the purposes of the Capital Market Union, to try to foster that a little bit. So I will stop the examples for now. And maybe just give then a word of what I think would be worthwhile doing in order to improve the situation. First, I think we should try to have an analysis of the different requirements between the different countries. I would also personally always argue that I prefer regulation versus directives in order to avoid different implementation in the different countries. I would make sure, and I think that was also the remark of Mr. Gerzin, I would make sure that in all the new regulations, and there is a lot of those regulations coming our way, I would make sure that at least those, they are harmonized, you know, that we have a uniform implementation. And then last, what I would like to see is a full harmonization across countries, but that's probably a dream, you know, or a long-term perspective. I think what we should do, if we really want to foster cross-border business for us, I would go definitely to mutual recognition. In the same way as we do passporting, I would do it for consumer protection requirements. And countries should accept that if all the minimum requirements, the minimal standards, you know, are applied across countries, they should then recognize the consumer protection requirements of other countries. So concretely, if I would be a French customer, you know, and I would open an account online in Germany, then I would kind of opt in and accept that I would fall under the German consumer protection requirements. I would accept that I would be handled in either German or English, you know, that language. And I would then also accept that I would interact with my bank through specific channels. And I think if you do that, you could really accelerate this harmonization. You could accelerate the choice, the transparency, and then at the end of the day, normally also prices should go down. And I stop here.
Thank you very much, Alan. Some very interesting ideas, very far-reaching. What do you think, Sophie, from looking at it from a European institutional perspective, having heard from both the investor and the industry perspective, how far are we in trying to realize a single European financial market for retail consumers? And, you know, are there some next steps we can do to try to move further in that direction?
Oh, there are always possible next steps. But I was just thinking, listening to this, that I studied history, medieval history. And my final thesis, my paper, was about an Italian merchant who had agencies all over Europe. And one of his main problems was payments and insurances. So this is about, what, 700 years ago? And I think we've not really advanced that much. As a matter of fact, ever since, we've pulled up barriers, national barriers. And we're dealing with the issue now in the European Parliament, and of course the spectrum is much broader than investment and insurances. I mean, it's covering many more products. And sometimes I get a little bit desperate because I think all the issues that are on the table, all the challenges, practical challenges, technical challenges, regulatory challenges, they can be solved. You know, it's not rocket science. But there's one big obstacle, and that is the lack of political will. And I have not noticed that the political will is growing. We are now in Parliament in the process of negotiating compromise amendments. All the political group have tabled their amendments. And, you know, then I hear colleagues of mine saying, well, basically what they're saying is, yes, let's have an internal market. Really good idea. And then you say, okay, then we have to change things. Oh, yeah. And they say, well, we need to preserve our traditions and our culture. And I go, yeah, but then you're not going to get an internal market. So we really have big obstacles to overcome. And usually the Parliament is actually more progressive in this sense than the member states. So when we get to the point of having to negotiate with the member states, then it's going to be even more difficult. But yes, there are big challenges, but I agree with you. Ultimately, we should have one big open single market. I've tabled one amendment myself to the report that we're drafting in Parliament with some figures that I found in a news report about the investments taking place in Europe, the United States, and China. In Europe, it's roughly, according to this news report, let's say nearly 350 million. In the United States, it's 1.8 billion, and in China, it's 2.6 billion. So, you know, we're lagging behind. I read another news report that a Dutch bank, a big Dutch bank, is investing 20 million euros in fintech in China. I mean, you know, that's a signal. That means that clearly they think it's more interesting to invest in China than it is to invest in Europe, and that should get us really, really worried. So I do hope, I mean, all these issues, which are real issues, consumer protection, technical standards, language barriers, regulatory barriers, fiscal barriers, and what have you, yes, they're all real, but you know, they can also be resolved if the political will and the political courage is there. If I look at there's a whole range of instruments that we have adopted in recent years in the area of payments, insurances, mortgages, investments, and what have you. They're being implemented, and the feedback that I get from the markets and consumer organizations is that already in the implementation. There are wide divergences between the member states. And then you really ask yourself, I mean, are we serious? Do we want this internal market? Because that really means that we have to accept that things will change. A colleague of mine famously used to say, well, everybody wants the internal market, but nobody wants the competition. That's pretty much it. But we will have to be willing to make changes, to take some risks, to accept that things will be different than you know, the familiar products and the familiar rules that we knew will change. Some vested interests will also have to be abandoned, and I'm talking about member state governments, but also, well, you know, let's call a spade, big banks, insurance companies, let's say former national champions who traditionally are very close to national governments, and who, I mean, I was listening to what you were saying. Yes, there are barriers, but still, for very big companies, it's still far easier to go cross-border than for small startups, for example. I mean, the big companies don't really need, you know, regulation to eliminate barriers. They'll find their way. It's the smaller companies. So I think there's a lot that has to be done, a lot that can be done, and that would offer us fantastic new opportunities, because well, you know much better than I about the degree of market integration, but the figures that we get of market shares are single digit. That means that there's huge, huge, huge potential. And yes, people may be, you know, they may be attached to the familiar products that they have known, but people aren't stupid. You know, they also think about their wallets. They want to have more choice. They want to get better rates, better deals. So ultimately, I think people are going to look across borders and think, well, if I can be sure that my rights are protected, if I can be sure that these products are safe, you know, if I can trust the information, then yes, of course, I'm going to buy across border. And inversely, companies will also be interested in venturing out. So I really hope, and I will certainly be pushing for a very ambitious position of the European Parliament. We hope for a very, very ambitious action plan for the European Commission, and then maybe together we can convince the member states.
Thank you, and that's a very good move over to Olivier. So there is a lot of new regulation coming, which still needs to be implemented, and that's clearly a big challenge, and particularly the implementation and making that happen in a consistent way. But there are also still significant barriers, and probably what we are currently implementing is not going to get rid of those barriers from one day to the next. So, Olivier, what's the ambition? What else needs to happen to try to really create that more integrated European financial markets? You've got some ideas from the other panelists.
Thank you, Verena. Good morning, everybody. Happy to be here and to see some friendly faces, which I often meet in Brussels as well. Well, a lot of things has been said, and indeed it's now for me to take it a bit forward. Many things have been said also by my Director General, Olivier Garçon, partially because I prepared the speech, maybe. Many people contributed in reality. But more seriously, I think the intention of the Commission was at least to have a solid and clear understanding of the obstacles. So that brings me back to the origin of this green paper we released last December. The objective was clearly to have a correct and more thorough mapping of why there is no such things as an integrated retail financial market. Both from the consumer end, from the supply side and the service providers end, with the extra element which is now changing a lot of things and patterns and consumer expectations, which is digitalization. And in that context, the consultation surrounding this green paper has been very, very interesting, very broad first, because we got more than 400 consultations. We had a big conference last March with some of you present. And I hope it gives us the chance to have a much better understanding of the existing barriers, which we largely know. Some of them have been mentioned. But at least it was useful to receive some insights, some evidence, sometimes some data from all contributors. So maybe what I will do is just give you a couple of highlights of what has been drawn from this consultation. It has been made public, and we did a summary which we released on our website just before the summer break on the 15th of July. And from that, maybe you could anticipate a few things that we are looking at more specifically, and which could be part of the action plan we are working on. To be honest, you know the complex decision-making process of the European institutions. We are still in the consultation phase. There are still a couple of arbitrations to be made. So it's a bit delicate for me to disclose all the details of some of the actions. But from what I tell you, it will potentially highlight some actions which will be covered in this upcoming action plan. So very briefly, we got more than 400 contributions, stemming, interestingly enough, stemming a lot from consumers themselves. So we had almost 200 answers from real consumers, and around 220 contributions from banking industry and federations and banks and big groups and investors, and the rest from public administration, authorities, including other international organizations and the ESAs, of course. And there were some fairly consistent messages which were showing that those barriers are quite important. From the consumer perspective, I think the big obstacles which were identified were the access to information. And we did a little survey also before releasing the green paper last autumn, and we realized that when a consumer wants potentially to go cross-border or to see if there are some better prices, better deals in other member states, is confronted to a whole set of obstacles. The first one is indeed to know, so to be aware and informed that he has access to some other products elsewhere. Then secondly is to be able to trust those potential other services. So that relates to things we have been discussing already, the language obstacles, the redress, terms of condition, all that might need to be addressed. And then finally, the last, of course, requirement is to be able to legally and technically acquire this product in different member states, which is often difficult. So the first thing we would like to try to potentially improve is the access to information. So that could go, for instance, via possible improvement of comparison websites. They exist here or there in some member states, but it's not always clear where the information is coming, how reliable it is.
Who's paying for the information?
Who is paying? So we might look at that. Some colleagues in DG Just have been preparing a bit of ground, so that's certainly something we could look out. Another big obstacle, and on that point I will potentially disagree with Alain, is all the conditions which the potential acquirer will be submitted in the new country. Here there are a lot of question marks, because the rules which will apply are indeed the ones of the receiving country, and often there is a lack of clarity on that. So this is the more tricky part, how far consumer protection rules could be harmonized. As most of you know, there are some old principle and legislation called Rome 1, saying that in most of the cases it is the rule of the home country which apply. But we could try to improve a bit the situation by improving the redress mechanism, for instance.
Very good.
Either having more exchange of information between the the different administration on that, having a more efficient cooperation between the national competent authorities also in charge of consumer protection, and trying to give more either power or at least visibility to the ombudsman network. So there are some financial services ombudsman in all member states, but they have the possibility to address cross-border cases. It's not very well known, so we'll try to improve that as well. There are some other obstacles which are a bit more difficult to address, like differences in national regimes, tax regimes. What we would like to do on that is to go a bit deeper in having a clear assessment of those barriers. So a possibility to do that will be to force a bit member states to disclose some of those national requirements. We have done that over the past years in the field of free movement of capital. It's part of the CMU actions, and it served a bit of purpose. So we have now more clarity on the type of national requirements which could be an obstacle toward more cross-border provision of services. So hopefully we'll manage to do the same for retail services. And then, like Olivier Garcin mentioned, we might explore the potential added value of having some partially harmonized cross-border services. I mean, let's be honest. Having a full harmonization by products, it's a bit delicate. It worked a bit for some specific investment products like UCITS, but the characteristic of this regime is that it's optional. So that's something we might look at. So to craft a potential harmonized product, but which will not necessarily be imposed to all peer players. So they will have the choice to go for it. But of course, it will embed some intrinsic cross-border dimension and partial harmonization of rules. And finally, we would like also to look a bit more thoroughly at the potential that digitalization is bringing. It also brings risk and threats. Maybe we'll come back to that a bit. So in that respect, we will try to push a bit all players, including national administrations, to take and harness a bit more the potential of e-recognition and digital signature. There is already some rules about that. It's called the EIDAS regulations, which kind of harmonize between member states the requirements for digital signature and remote identification. The problem is that it concerns only administration, so we would like to try to find a way to harness most of the potential of those new technologies also for the financial industry, and in particular to potentially facilitate the know your customer requirements that banks have to perform when acquiring some new consumers. So that's some of the things that we are looking at. There are others. Maybe we'll come back to some of them, but we are committed to have an ambitious agenda and to push forward some of those big problematics with the support of the Parliament and hopefully of the Member States and the ESAs as well.
Thank you very much. I suggest you might want to come back on some of the things that have been said by your fellow panelists, but I thought we'll get a bit of a view also from the audience and then come back to some of the themes. So maybe to start with and to get all of us involved, can I ask the first question to be put up so we try out this voting system? And the first question is very closely associated with what we've just discussed. So the question is, do you think that the current structure of the European retail financial market is sufficiently integrated? If not, how, in your view, can it be improved? And there are basically 4 options to replying to that. Yes, it's adequately integrated. No, it's not, and it can be improved through better incentives for retail consumers to consider providers located in a member state other than their own. Thirdly, no, it can be improved through modification of the current regulatory framework, which is still creating barriers. And then fourthly, no, it's not sufficiently integrated, but the remaining barriers are of a nature which cannot be overcome. So if you could now open the vote, and if people could press the relevant option of the answer they believe is most relevant here. Has the vote been opened? Okay, so I see the responses coming in. So very good. Keep on pressing. So I think we've got most of the responses here. I think let's close the vote. And if we can see the results. Oh, very quickly. Wow. So we see very few people seem to think it's adequately integrated, which seems to chime with the view of the panel here. And then when it comes to what can be done to improve it, there seems to be a bit of mix of view. Quite a few seem to be pessimistic and saying, no, actually, there's not much we can do about this. But of the people who think something can be done, probably nearly double of think that the regulatory regime is still creating barriers. So coming back to, and the other one is about better incentives for retail investors, slightly less. So clearly there's still an issue here. Any questions on this topic from the audience that we should incorporate into our discussion as well before I go back to some of the panelists? There's a question back there.
Thank you, Verena. It's Dan Waters at ICI Global. And my question is to Olivier. You were mentioning, I know you're going very interestingly through the responses thus far to the cross-border consultation. Are you considering, and when you spoke about harmonization, are you talking about the possibility of a pan-European marketing regime, so the harmonization at that level? We have UCITS, of course, we've got AIFMD, but I'm talking about, from the experience of the members of ICI Global, which is the global asset management community investing into and around Europe, I think we feel huge difficulties, and our Deutsche Bank speaker has referred to some of these, dealing with these inconsistent and expensive and complicated and variable marketing requirements across the continent. Thank you.
Thank you. I think there was a further question here in the front.
Thank you. It's Jazina Kameling, CFA Institute. Thank you very much, Niels, for bringing up some of the issues that we too at CFA Institute have seen through our CMU survey, which is that other means of information are being used massively. I think it was very interesting from the panel coming up that we seem to be at a crossroads, and Sophie and Feld mentioned that there is a huge opportunity, which we think at CFA Institute this is absolutely true. But we are in a world where the reality is language is a barrier, and we've seen it in UCITS, in the interpretation of UCITS, for example. And these seem to create issues, and then of course cultural on taxation issues. And at the same time, we live in a world where, for example, to give an example on book buying, people used to say, oh no, I'm never going to abandon going to my bookshop, etc. But Amazon has now become a mainstream. So the opportunity is in Europe for something like Amazon in financial services, isn't it? And what is the role of the European supervisory authorities? Because it is key at a European level to monitor and to really be at the forefront of all the fintech development. If you look at a recent survey we did at CFA on fintech, we think robo-advice is going to be one of the main significant changes within the next couple of years. So again, I put to the panel, how can we overcome and how can we move forward? Thank you.
Thank you very much. Any further question on the integration status? There's one further here in the front.
Thank you. Sheila Nicol from Schroders Investment Management. It would be interesting to know how many of the 94%, Verena, that you quoted might actually hold a Luxembourg fund that is managed by a pan-European operator but has been offered to them by a local distributor. And really that was my point, that one of the successes of the funds market and the integration of that market has been the development of open architecture and willingness of distributors to offer third-party products. On the other hand, there is quite a lot of news that combination of PRIPS and MiFID may lead to more closed architecture and more in-house products simply because of the onerous nature of the information that needs to pass between the two. And I wondered if the panelists had any comments on that.
Okay, thank you very much. I might start with that kind of set of questions and also taking into account some of the things that have been said before. So I suppose we're back to some of the regulatory barriers that you have already raised but have also been raised here around marketing. Question, is there more that can be done through open architecture and things like that? Where do you, maybe starting with Sophie, do you see there are kind of still specific regulatory things that could be addressed here?
But well, as I said before, of course, it's not necessary to make the analysis here of exactly what the regulatory barriers are. We know, but I think one of the answers lies in the. I'm still trying to recover from the shock that the biggest group thinks that the biggest obstacle and an unsurmountable obstacle is language and culture. I mean, that's really shocking, because that means that we're actually, in my view, clinging to something, from the past, and we're missing out on opportunities of the future. Language is, yes, it's an obstacle, but it's a practical obstacle. It can be overcome. With culture, this reminds me of the debates we had around SEPA a couple of years ago, where the whole thing nearly collapsed because, as one of the negotiators said, German people are used to a 12-digit bank account. They cannot possibly get used to an 18-digit bank account, and therefore, we're not going to. I'm not kidding, eh? Really, I mean, if that is what we want in Europe, then let's stop talking about an internal market. Let's not fool ourselves. We want an internal market. It means that we have to accept that things will change. Now, I think the whole thing, and I've noticed this also when we are negotiating single instruments, directives, and what have you, that it's more and more difficult to arrive at a compromise. You can see, in particular, the member states digging their heels in, and the negotiator on behalf of the council doesn't have a millimeter of space to negotiate, because none of the member states wants to change the slightest thing in their own traditional systems and products. And for me, that's very much an expression of the kind of public mood that we're in. Everybody is so incredibly afraid of the future that we try to cling to an imaginary past. I was just yesterday thinking of the movie Goodbye Lenin. I don't know if you know it, of a woman who is in bad physical condition, and she is not aware of the fact that the wall has come down. So they're recreating a whole world around her, the way it used to be, to make sure that she is not shocked by the present. Well, that's a bit the state of mind that we are in Europe. And I'm pretty convinced that young generations, I mean, also if you look at the results of elections like the Brexit, for example, young generations think very differently. They have grown up in a different world. But it's the older generations that are actually making the rules. And they are the ones attached to the regulatory framework and the fiscal systems and what have you. So, we really need to shake things up a little bit.
Absolutely. Very interesting, and clearly going far wider than the retail financial market, but you're absolutely
yes, that's
right.
True.
Niels, maybe from your perspective, were you equally shocked about the outcome, or where are you if you look at the different answers? Would you have also kind of pressed the fourth button?
I would have never pressed the fourth button because I never take no for an answer. Well, the thing that struck me when I heard the other panelists talking is that we all seem to agree that there needs to be done something, but you don't agree on what. Why not start with the low-hanging fruit? Why not start with the very easy way of saying, if the member states are not going to move, the regulators should start moving. So supervisory conversion, it's the topic of the third panel, is a very good way forward. And I think that regulators should help each other, because retail investors getting offerings from, let's say, out of bounds products that are not really suitable, who not be affordable, who's not long-term, that should be abandoned. But that needs sufficient power of the regulators. They have to work together, helping smaller staff regulators by bigger staff regulators. Make sure that if people go across border, that they can rely on the regulator of the other country. So make standards. Maybe make standards of how to communicate with the investor. It's more about communication than it is about new regulation. I think it's more about better implementing the regulation that we have instead of making new ones. Because my constituents don't read 1,500 pages of MiFID consultation documents. They pay me to do that, and I was completely lost at the end. I needed help from the industry to understand some parts of it. And one specific thing that also needs to discussion is advice. I mean, we've got 3 different forms, regulated forms, execution-only advice and asset management. Well, execution-only, we make progress on that. I think the execution-only channels are most advanced and are most open for European buying of funds or buying of products or equity. It's the advice part where the difficulty is. If a consumer is receiving affordable, suitable, understandable advice about products and services, he might increase his belief in the advisor. He might increase his belief that he needs to do something by himself in these challenging times with 0 interest rates. So I really like your idea about making it possible to have bank accounts crossing and following the product and following the movement of the person. We did a mystery shopping in all 28 member states. Was it possible with a Dutch bank account to open an investment account in another country? Not surprisingly, 0. We weren't able to open an investment account because they said, you need a bank account. Yeah, we have a bank account in the European Union, and we have SEPA, so you know where I am. You can see me, you can see my tax claims. No. So, start with the low-hanging fruit. I truly believe in your European story and your vision, but let's listen to box 4, because box 4 is also the Brexit voter. It's also the Dutch voter against the Ukraine treaty. It's the people that think, let's first make things working and happening, and then talk about new things.
Well, can I respond to this? Because I'm very much straight. You say, well, why? It's a question, basically. You say, why don't we start with the low-hanging fruit? Well, I'll tell you why. If there were only Europe on this planet, then that would be a valid question. The point is that there are others who are moving faster and will be overtaken, and not just in this sector. And secondly, what you said about the voters, I think this is also a reflex that we have in many other areas.
Sure.
Looking at the part of the population that is scared, that is anxious, that wants to go back to a probably imaginary past. But there is, I mean, look at you mentioned the Brexit vote. It was okay. In the end, it was there was a small majority in favor of Brexit, but overall, it's 50-50 of those who voted. If there had been 100% turnout, there might actually have been a majority against the Brexit. Those people must be heard as well, and they are young people. They are the future, and you can approach this from 2 ways. Either say we start from where we are now, and then we see if we can, take small steps ahead, or you put a dot on the horizon And then you look at how should we get there, and it's more ambitious. And then we also have something to offer people and something to convince them with. I'm pretty sure we can convince them.
Yeah. So it's about setting the right vision, but also then being clear about the steps that you take to get to that vision.
Yeah, and let's make those steps very concrete.
Yeah.
Let's make it very concrete. Let's start with, if I ask for an advice, I get an advice that is for me, that benefits me as the consumer and not benefits the advisor. So let's start with that one. If we can achieve that by MiFID II, by the transparency on costs and charges, by the independent advice, by non-regulatory benefits and all sort of other very big issues. But if we can get it back to that, when I'm going into an advisory office, asking what's the best for me in 30 years' time, and somebody says, oh, you just buy a fund. Just buy a fund, and oh, I've got one here, and I don't tell you what the costs are, I don't give you the key ID or the key ID or whatever document there is, we're not going to get on your dot on the horizon. That's my point. I truly believe in the dot on the horizon, but we have to make concrete steps.
So Alan, you talked about the vision in a way from your perspective. And what are the concrete steps then that we should first take?
You know what? I think the dot is already there. You know, in a way, I was also completely shocked by the answer. You know, I cannot believe that. Maybe we should have had a breakdown between the voters, you know, between consumer organization and banking. I would suspect that in many instances, bankers are maybe of the old generation, not wanting to see things changing, because, you know, more competition means more products, means also lower margins, so they will need to adapt, means open architecture, for example. But what I wanted to say, and that's what I said, the dot is already there. When I see the 6 countries we are in, customer needs are already the same. There is basically no difference. Maybe in insurance, because it's a very specific business, very local business. But for advisory business, we do see exactly the same needs in all the countries. We see the same portfolio. So the convergence is already there. No, we need to push it, we need to accelerate it, but it's already there. So this cultural barrier, I don't buy it. I don't buy it at all.
And even the language barrier you don't buy?
Look at my kids, you know, they are on the internet, you know, all day long, you know, they interact in English. They are 12, 13, 14 years old, so I think it's a new world, you know, so this is also no more valid. Probably 10 or 15 years ago, I would have agreed, but it's no more the case.
No, and obviously some of it has mentioned here as well, the financial innovation, the digitalization, all of that is changing the consumer behavior and also the opportunities, obviously, significantly. Do you see that already coming through in your business?
Sorry, what do you mean?
The digitalization, so the new technology driving different consumer behavior.
Yes, we do. And someone did ask a question on robo-advice. I think robo-advice, it's really in its infancy for the time being. I think the winners, and we already do a lot digital, and what we see, the most complex things, and that also relates to big data, also some comments have been made on that one, is our ability to kind of replicate an advisory process that normally you do face-to-face, to kind of partially automate that process. So this is something which is much more complex than the very simple robo-advice that we see now. But I truly believe that in a few years from now, maybe also with some artificial intelligence, that we will be able to be much more to the point in the way we can advise our customers, also, you know, through digital channels. And then maybe customers, and that's what I would suspect, they will always want to validate somehow, you know, the choice that has been done by the machine. But I really think that a revolution there also will come.
And maybe I should just add, because the question was particularly put also to the ESAs, we're very, very actively looking at these financial innovation steps and what they might mean for the next developments in terms of how you can create further integration of the European market, but at the same time ensure proper consumer protection along that way. And that's really the kind of key here. Olivier?
Yeah, maybe to come back on one or two things which have been said. I think there is a broad agreement that some of the tools which have been used so far are not necessarily fit for purpose anymore. We know that negotiating a big piece of legislation is complex to craft, to produce, to negotiate. And the real issue is indeed to implement it and enforce it correctly. So that's why on those issues of retail and partially investment products, we believe that what has been adopted and decided should be correctly enforced, and we heard it already and we'll come back to it. And some big imposed large pieces of legislation harmonizing markets or products will not necessarily help. So that's why in those ideas we are considering in the upcoming action plan, we would rather go for a combination of little proposal which will help to have more information, more transparency, more comparability of products, but also trying to confront the member states to a certain extent to some of the existing regulatory barriers. The other challenge it puts on us regulators is indeed a bit the time frames of those evolutions. Digitalization, fintech, they have reactions which are very fast, and the uptake of some new tools, applications is super fast, and it doesn't correspond to the classical EU decision-making process, which take from 2 to 4 years to really change the patterns in real life. So I tend to agree that we should also imagine some other ways of addressing some of these issues, recommendations, standardization. But at the end of the day, and Sophie said it, to have some real big change, sometimes member states or players need the big stick, which is regulation. So we have to navigate a bit between those two contradictions, and it's not easy.
And on the concrete steps, there was a question specifically about marketing rules and other parts of the fund industry. Anything specific you can say on that?
That's the principle of what we call an opt-in regime or a 29th regime is that it's largely harmonized. It's potentially a bit more simple than some existing complex products. So that's what we are reflecting on with EIOPA, for instance, on pan-European personal products. And we have a bit the same logic maybe for some other products which have a real cross-border dimension in the new life of people today who are studying, living, working in different countries. So we will look at a bit what comes from the PEP reflections, and we'll see whether we could potentially expand it to life insurance maybe. But then the pattern is that it largely harmonized the legal requirements, including in terms of marketing and establishment. But that is not necessarily mandatory for all member states and all players to implement it completely.
Can I add something extra? Because when MiFID comes into force, I will celebrate the day.
3rd of January.
3rd of January, I know, 2018. ESMA is getting a massive amount of trading data. And the question I have, and maybe in the big data panel we'll discuss that, is how can we use that trading data to improve investor protection? See the patterns, see the selling, see the constructure, see the architecture, and this task is especially for ESMA a very big one. And I think that you will have to hire more WizKids than lawyers, which I think would be better for everybody. And that you need to think about how to use it, so the user is using this. And the other thing is, financial literacy is also a very important part of it. It's for occupational pensions, for insurance, for investment, for savings, for a lot of things. And this might not be the right panel, but I think that Ms. Innetveld completely agree with me when I say we should try to have all the kids in Europe understand a little bit, just a little bit, about the financial future. Compounded interest, what is that? We're living in a complete new situation of low interest rates and uncertainties. And of course people adapt, and children are the most flexible. But they still have to think about the intergenerational conflicts of pensions, and they have to think about money for the future. It is there, so don't forget that part of it. I like Mr. Saleh's way of thinking and dots on the horizon, and so I would like to put something extra, an extra dot next to that. It might not be his unit to think about it, but maybe you could pass it forward internally in the Commission.
Yes, surely, you know, capability of actually interacting in these markets and comprehending what is hopefully transparently there to look at is also something that is a challenge that is for all of us. It's not just for the regulators, the supervisors, it's also for the industry, it's for the consumer representatives and also the political side, I think. Can I maybe, yeah, come in.
Maybe just a quick reaction on that. That's something which was partially covered in the remit of this green paper consultation and discussion. And we had some strong messages from consumer organizations, and we discussed it in several occasions and different settings. But one of the big questions behind it relates also to the complexity of products. So let's not hide it. The more complex the products are, the more you need the knowledge, education, advice. If you would have a bit more simple products, they will be a bit more easy to understand. And also to exchange and to buy cross-border. So that's something we might also to have a look at.
Can I
is there an incentive for the industry actually to make it more and more complex? Because then we need you and we need your advice.
No, it's we don't try to make a product more complex. We try to have the best products for the consumer. But what I wanted to say is that also we should be consistent. In all the new regulations, we are now introducing the concept of target market. And I think this is really the answer to make sure that the right product is going to the right consumer. In the past, I understand that some regulators across Europe, and again, it's different from one country to the other, but this is not aligned. Some moratoriums have been implemented on complex products. But you see a very different view from one country to the other. It could be banned in one country and could be the best-selling product in the country just, next door. So there is no consistency. I think we should also try to align between the different regulators now, know that the target market is there to make sure that the right product is really sold to the right investor.
Absolutely. Can I maybe move us on a bit to something that actually Alain mentioned at the beginning, which was the question of how do you actually maneuver in this environment? And it came back also in some of the other comments between different national member states. And how can you, in terms of vision, can we get to something that is a genuine, completely harmonized, mutual recognition environment where, home host responsibilities are very clearly divided? And how far is that still an issue about actually the fact that particularly in the retail markets, there's clearly still a huge drive to keep national protection in place. And how can we overcome that, and what can we do to try to make the home-host relationship work better, in your views?
May I start by one point? If I almost get tired of the sentence, financing SMEs is the backbone of our economy, but it's true. But investors, especially retail investors, has a very big home bias for financing or funding SMEs. So you have to take into account the structure of the market. For funds and ETFs and equity, there might be a genuine single market. For funding, small and medium enterprises start locally and don't put the same rules and regulations on those kind of investments as you have on others. Because if you really want to have a genuine SME financing market, you have to start local and then bring it up on a higher level. And so that's also how retail investors see it. They might quickly invest in a company where the truck drives to the streets instead of buying an ETF that does the same thing. So we need to have that very specific focus. Institutional investors, who are also my constituents, they oversee, of course, the complexity and the complete market, and they are more willing to invest in broader European products or possibilities for long-term investment in projects or services. So I think that we need to have that distinction. But I don't know if Alan sees the same patterns, because it's very easy to build a low-cost, plain vanilla investment product for SMEs, but how do you sell it?
No, I agree, and in that framework, this home host question also. What I would say is that mutual recognition is a way to achieve that. Transparency also probably between regulators. I don't know, and I cannot judge, so it's not a judgment call from my side, if the level of trust is high enough between the different regulators, and you need to have that trust in order to probably improve this home-host relationship, create transparency also on complaint management between them, because there is one thing I am surprised. If it would really work, this home-host regulation, I would expect regulators to come to me globally, saying, well, Alain, what are you doing in the 6 countries? Are you consistent in what you are doing? This is the way what we do. We make sure that the advice we give in one country is the same with the other country. That we have consistency, because there is no way to have 2 different advices. But that is something I have not yet seen. So probably also there, in a home-host kind of relationship between regulators, I would expect that they come globally to us.
Okay. Maybe let's stop for a second and ask the audience again, and this would be the second question about this distribution of responsibility between home and host. So the question is, do you think the distribution of responsibility between home authority and the host authority should be reconsidered in some of the directives in light of particularly the fast-growing development of online cross-border services that we also talked about? First possibility, no. Current distribution is fine. No, but the cooperation needs to be improved, so that's a bit where Alan is pointing, I think. Or yes, in some sectorial directives, the distribution is no longer adapted to the structure of the market that we now see. So can I ask for responses on that? Before we reveal the outcomes, what would you each say? Olivier?
I would go for 2, I suspect, but maybe a bit of 3 as well.
Combination of 2 and 3? Yeah?
I would agree.
Not that we want to influence the outcome of the vote, of course. Okay, I think we're getting towards the end of the voting. Can I ask for the results to come up? So either we've influenced the voting or there's a reasonable consistency in view here. So it's a combination of 2 and 3. And I suppose looking at the kind of enhanced supervisory convergence work that we are doing in the ESAs, that clearly is trying to very much put the kind of strategic direction and push behind the 2. Olivier and Sophie, maybe what do you think on 3? What would be the kind of top priorities there for you?
Well, it's difficult to say, and a bit like we said already this morning, including Olivier Gerson, I mean, there is already so much of work to be done with the legislation we have now, that already achieving some more consistent enforcement of existing EU law and more consistency between national competent authorities will help a lot to address some of the potential tensions between home and host. And actually, a lot of that is being done, and maybe it's not sufficiently known, but you, the ESAs, you sit every day with the 28 national competent authorities, or 19 in some cases, if it's just your
sometimes just 2 or 3, it depends,
yes.
Yeah.
But a lot of that is happening already in trying to differentiate the approach for home and host. It exists in some legislation already a bit today. From our perspective, we also have to be mindful that the internal market should remain more or less integrated or harmonized. So for me, we should already complete a bit more, some better enforcement and more supervisory convergence.
Sophie?
Yeah, well, it's difficult to say, of course, those who voted for option 3 exactly what sectors they had in mind. Or what
maybe we should ask, actually,
yeah,
whether anyone wants to give a bit more specificity about what they thought should happen. Let me first go here to my far right there.
Yeah, thank you very much. Christian Verbich from Pennsylvania Investors and Shareholders Association. I would just ask you if there is maybe a possibility not just to think about directives and supervision, but as well as some kind of institution of maybe European ombudsman for capital markets, financial markets, that would somehow even enact, in a case of national states, some common, basic, at least, standards for a common market. Thank you very much.
Thank you. Any other specificities? Dan already asked a question. I'm trying to see whether there's anyone else beforehand. No, going back to Dan.
Thank you, Verena. I understand the moderator's duties here. Just to say, I think to be specific, I would say what we, the global asset management community, is seeking is, and I know Olivia keeps saying no, so is a pan-European marketing regime. Having myself spent 30 years in regulation in the UK and also in the US, and having worked on improving the regime for UCITS, it took 20 years to get to a better place. So I have to express a certain amount of skepticism, I think, about how much 2 up there will deliver. I think it's important. Cooperation is important. Consistency of enforcement is important. But I don't think that's going to be the answer to removal of the barriers that our members so strongly see in place across the continent. Thanks.
So maybe back to Sophie, because I interrupted you.
Yeah, no, but I tend to agree with that, and I think ultimately, you know, we are moving, or we have to move in the direction of 3, but 2 is of course very valid. But if you combine this with the outcome of the previous question, then you see where the problem lies. I think what you both said in different ways. You mentioned the keyword trust. Certainly for 2 and 3 also, you need trust. And that is sorely lacking, and that is funny actually, because we've been together in the European Union, in the internal market, for many, many decades. And it is really incredible to see that national authorities still do not trust each other in many different areas. And we concluded, for example, the pension fund directive just before summer. Now, it's a bit thing, yeah, I can see you laughing. But it was impossible to agree on a system whereby if a fund goes cross-border, there is only one authorizing authority, either home or host. You know, at some point we didn't even care anymore. But a single authorization regime. It was impossible to attain. Now, in practice, the 2 countries where this takes place most, or at least a lot, is between the Netherlands and Belgium. I mean, they're not banana republics. Why, if between the Dutch authorities and the Belgian authorities it is impossible to trust each other, then what are we talking about? And that's why I'm coming back to this issue, because we can talk about all the technicalities, but that is, you know, in essence, that's not the biggest problem. The problem really is trust and political courage and political will, because if you have that, if you change the public mood, then, you know, everything else will follow more easily, because if there's trust, then you can agree much more easily on the things that need to be done.
Can I ask one question?
Some final kind of
no, not my final one. No, not my final one. Just a quick question.
We're running out of time, Niels.
Listening to this plea, are you in Parliament willing to give more powers to the ESA to get that national trust or get that supervisory conversion in place. Because if you'll have the ESAs constantly talking to 28 member states instead of just taking decisions, well, then we will stuck here. So maybe those guys and girls need some extra powers.
But I don't think that you will find the biggest opponents of that proposal in the European Parliament. So
nor in the ESAs, I guess. But
no.
So maybe just some final comments on the kind of integration. So Alain, you kicked off this kind of vision of a single European market. Are there any kind of particular concrete areas that you think, in this step-by-step to get us to the overall vision that we are still aiming at of a genuine single market? Where would you start?
I would probably highlight where we are now, and the next steps. There are already a couple of directives that need to be implemented. And I fear that, again, we will miss an opportunity there by having differences between IDD, MIFID, PRIPS, definition of inducements, definition of target markets, of quality enhancement. There are many ways where we could diverge once again. So we have a unique opportunity to try to converge, but we are not yet there. So we should be very careful.
No, absolutely, and I think that's something that is incumbent both on, I think, the EU institutions, but also the European supervisory authorities to try to further push in the implementation consistency and commonality, and doing that both within the individual ESAs, but also across through the Joint Committee. That's clearly very important. And I think it's equally a demand on the Commission also to really look at issues on a cross-sectorial basis, which is always a challenge, but it's something that we really need to try to do. Any final comments from anyone on the panel before we draw this to a close? Niels?
Can I address specifically the Commission? Because the idea behind PRIPS on a 3-page document that tells investors actually what the thing is that they are going to buy was very important. It was in the, let's call it technicalities, that went wrong. And Parliament said something, it's now to the Commission, but please hurry up. Don't delay that too much. We need those kind of documents, and we need some structure on harmonization rules for marketing commercial things, because that's what people also read. So please take that on. And if I would like to put a dot for RENA, and the dot is the 3rd of January 2018. Let's have all that regulation, MiFID, PRIPS, the new green paper, let it all be come down to that day that when I wake up in the morning I could say to myself, yes, we are starting a new era.
So, Olivier, final word?
Well, just to take note of Niels' remarks, but Gerson said already that we are committed to move rapidly on that, and we will. Just to close on a positive note, it gives the impression that there are only obstacles and challenges in the field of retail. Let's not forget that a lot has been done in the past. With mortgages, payments, and I wanted to remind you that a big piece of legislation will enter into force in 2 days, which is the Payment Account Directive, which will facilitate the possibility to open a bank account, at least with basic services, in all member states. So let's conclude on some positive steps and little improvements.
So we're in gradual progress, step by step, and there's a lot still to implement and happen, and I think the kind of overall vision of trying to take us closer to a genuine European retail financial market for the retail consumer and for the benefit of the consumer is clearly something that we have to all have in mind as we do that implementation and try to ensure as consistent implementation and coordination and trust and supervision that really has to happen over the next few years. So hopefully we will be a lot closer to that by the 3rd of January 2018, certainly an important date for all of us. So thank you very much to my panelists and to the participation of the questions from the audience. Thank you, Alain, thank you, Sophie, thank you, Niels, and thank you, Olivier. It remains for me to announce that there's going to be a lunch now outside these doors, I believe. And please be back at 1:45 when the next panel will start, and that will be on the important topic of big data, which we have already touched on with the fintech challenge that is ahead in the financial markets, but I think it will be a really interesting discussion at the next panel. So please be back at 1:45. Thank you very much.
Thank you.
Thank you very much.
Hello? May I ask you to sit to start again our second panel on big data in financial sector, please? I try. Okay, so good afternoon to everyone. Let's start the second panel on big data in financial sector. This morning was already mentioned a bit the subject, so let's focus on it now with our three distinguished panelists. Let me just start saying that the digital economy is an ever-increasing phenomenon nowadays. Mobile phone devices, social media interactions, web searcher are all sources of data. Some people are starting to say that there is a new industrial revolution driven by digital data. And according to some studies, the business volume of this big data technology is increasing at a very fast speed. Obviously, this is not exclusively a phenomenon which affects the financial services sector. It's, it's something which relates to the internet giants like Apple, Google, and also other industry sectors are affected. But definitely is a topic, an hot topic for the financial system. A lot of discussion, panel, seminars, articles in specialized media are dealing with the topics. And we have also seen that a number of financial institutions are appointing chief data officer. So the phenomenon is quite widely felt as an important one. As I said, the progresses are very fast. new business opportunities, new entrants in the market. Fintech, insurance tech are emerging, new entities basing their business on technology. As I said, the financial institutions are making the necessary adaptation to their business model, to their internal organization. And actually it seems that this technology revolution may cause a profound change in, and maybe also disrupt the traditional way to do business. This is the reason why today we are focusing on this topic, to understand better what are the risks and the opportunities, both for the financial institution and the consumers, to understand how big data is changing really the financial landscape, and also which role the regulatory authorities may play in this respect, how they can support the financial innovation while continuing to ensure that the financial, the consumer protection framework is, let's say, functioning well. We are going to discuss these issues today with, with our three experienced and distinguished guests. Marta Nagy Rottelhaus. I asked you for how to pronounce it, but it's impossible anyway. I already. She's in charge of data and policy innovation unit in the European Commission. We asked the three panelists to give us a sort of short statement of their thinking, and I'm going to read the one from Marta. Her statement is, we need to find a good balance between allowing for the interesting and possibly game-changing ideas to be tested and put to life, while at the same time making sure the trust and privacy between different actors of the data market is not jeopardized. The other panelist is Andreas Braun. Andreas is responsible of Global Data and Analytics Computer Center at Allianz Group. Your statement was a bit longer, I'm going to read. Big data and advanced analytics are not buzzwords. These are technology-driven innovation that are here to fundamentally rethink our society, how society deals with and benefits from technology and insight. However, while we start to understand the potential and application of these game changers, we start also to understand that maybe the only limit might be its power itself. I truly believe that we need a solid and transparent approach to eventually release big data's positive impact on society to its full potential. And on the opposite side, from Klaus Müller. Klaus is the executive director of the Federation of German Consumer Association. Your statement, Klaus, was big data can be a chance and true value for consumers, but only if there is a good, fair, and efficient regulation. There are great risks if those regulations come too late or are not adequate. So thank you first of all for this interesting, not so much diverging, if I may say, statement, but with some, let's say, differentiation in the accent of those between risk and. But first of all, let me start with a question for the audience before giving the floor to our panelists. I would like to make the first question to the audience in order to just check, let's say, what is the level Where can someone put the question number 1 on the screen? The question is quite simple. What is big data? Exactly. I'm not going to read all the answers because they are too long. I just want to give you enough time to read it and select your answer. Please start with the vote. What is big data? Please. I'm checking the number of answers. Don't be lazy. Continue to vote. After lunch is always more difficult. And also the question maybe is not so easy. I don't know. When I saw it, I was in doubt on the answer, but my staff provided me with the right one, luckily. Okay, I see that a good number of answers were...
Ooh.
Yeah.
Oh.
For sure cleverer than me. Okay, so thanks a lot for the quite, let's say, good indication. Andreas, I would like to start with you on let's following the first kind of question. So how can I say, is big data truly a disruptive force in the financial services sector, or there is nothing new about financial institution analyzing data? What is this phenomenon about? Please.
Big data definitely is a totally disruptive force in many areas at financial institutions. But we have to, I think, distinguish between what big data was yesterday and is today and what it hopefully will be tomorrow. Let me use an analogy of two cakes. Today and yesterday especially, big data was used to win the bigger piece of the same sized cake. So it gave companies competitive advantage if you do customer analytics right, if you do, I don't know, use big data to more efficiently drive your processes, underwriting, all these things. But the cake for society was always the same size. And there's a discussion by Alessandro Acquistini from Carnegie Mellon University who argues, and he uses that, for instance, for a large internet search company you may know, that only these companies are the winners. Society is not the winner, the customer is not the winner. Only one who can leverage big data analytics better than others will win in this game, and ultimately there is no bigger benefit. What we all strive for is to create the bigger cake, to use big data to create something much bigger for the whole society, to have a benefit for all of them. So to use an example use case we currently develop at Allianz is one example that is tangible. I have also examples that are intangible at the moment. But a tangible example is we use large data sets from patient records, medical health records in one big country. 10 years worth of patient data like treatments, like prescriptions, like drugs used and so on, to predict certain severe diseases. Severe can mean it's severe for the patient. It can also mean that it's from a financial perspective, for health insurance, severe. And one example that actually works very well based on big data analytics, when I say big data analytics, it's typically machine learning and artificial intelligence, is to predict diabetes. And so basically the history of a patient will tell that this person ultimately may develop diabetes. Now diabetes is pretty expensive to insure, so you have lots of claims, it's expensive. The disease takes quite a long time, and it's all the time very expensive. Otherwise, it's also very controllable. And what the plan is now to create a product that allows us to insure higher risks in health insurance, like to actually insure somebody who will develop diabetes at a very low premium, and to help this person, for instance, giving an Apple Watch to that person, to steer and direct the disease, i.e. to control the problem. And that can mean that you have to see your physician frequently, that you change your nutrition, that you have to work out once a day, and take a lot more care about yourself, actually. And then diabetes is a controllable disease. We can insure it, the cost is controllable, and as long as we are in a green area, let's say, also we don't really conflict with data privacy, because there's a process in privacy by design where we actually don't need to know as long as everything's in the green area. And this is one example of the things we should try to achieve with big data, the much bigger cake for the whole society, and win-win situations for the consumers, for the companies, because we have lower claims, and society as a whole.
So, thank you. Let me just hear also from the side of the consumer, let's say. What are, in your opinion, Klaus, the opportunity and what are the fear from the consumer side? We have heard about increasing the cake, which is comfortable, let's say, but
increasing the cake sounds always great, because everybody loves cake, and if the cake is combined with the promise of being healthy or staying healthy, that's a delicious cake. And actually, I believe that there are chances in big data, and probably when we talk about it, all topics around health, mobility, these are always the two examples which we hear first. Now, if you listen to the consumers themselves, we've asked them last year in a representative survey, it was around 81% for Germany, where the consumers had a strange feeling. They were not feeling so good about big data. Now, there can be several answers why they feel like that, because they have no concrete benefits, because their experience tells them if somebody promises a big cake, they do not always believe that they get a chunk of this cake. And maybe they just do not know enough about it yet, and they just feel uncertain. And maybe Germans are always a little bit more careful. So if you look at the opportunities, there are, I think, two major opportunities. One is everything about warning for potential risks. And yes, diabetes is definitely one risk we can cope with if we know enough about it. And on the other hand, if you want to, or if you can support people by making right decisions, because our memory, my memory, the memory of most of us, is not as good as any computer. So if somebody looks what kind of decisions I made in the last 10 years, and if you look at my bank account, you're probably a lot smarter than I am at the moment. And big data applications, knowing of my financial transactions, they can help me make a better choice concerning certain companies or anything else. Okay, so yes, there are opportunities. But you did not invite me to talk about opportunities. Other guys can do that a lot better. If consumer protectionists look at big data applications, there are some headaches we get. Sometimes the headaches are slow, nasty, but not dramatic. But other kinds of headaches are really hurting bad. And just give you a small insight what kind of headaches they are. Well, first of all big data applications can only be so good as they are actually programmed. And we know by all different kinds of programs, you have programs which work very good, and you have programs which are programmed very lazy, and they make mistakes. For example, if you take the diabetes example, definitely not for the Allianz, but maybe for some other company, if they have faults and problems in their programs, if you tell me I get diabetes by a 99% chance, and there's a mistake in the program, we have a problem. If you look at the financial services talking about robo-advice, in the panel number 1, if these programs are programmed in a wrong way and not in my concern, if they just copy all the mistakes we had in the traditional world
of selling financial products, not to the advice of the consumers, but more to the value of the companies, robo-advice will not be any better than what we know at the moment. We know that programs can only be good if there are authorities which can actually understand and control them. I give you an example which Germans do not like to hear at the moment. The problem with Volkswagen was not about their brakes, not about their motor. They are terrific, they are great. It was about the problem of their software. So if you transfer this example, yes, I know this. It's always difficult if you make bad words about Volkswagen. The problem with Volkswagen is neither, I can speak very loudly, neither the authorities understood, oh come on guys, neither authorities understood what was in these codes until somebody told them from the United States, nor actually at the moment we have the experience that Volkswagen itself admits to have known what they have done. This has to be decided by court. So the second headache we have are ESA and everybody else. Are all the authorities capable of knowing what is inside the programs of big data? Can anybody control and do their job as an authority in these times? And the third thing is, and now I'm really kind of worried about the survey, and maybe we can have a quick look again from the guys from the IT branch. The choice you picked by 77% said something about correlation and predicting the future. And yes, this is the big promise of big data. You want to know what all of us do tomorrow, next week, next year. You would like to predict our financial decisions, the way we want to live. And what can be true in statistics does not have to be true by the individual. What I want to say and what I point out is that correlation is not a cause. Means that a lot of guys being male in the mid-40s, living in Germany, want to behave in a certain way. And if you look at the thousands or 10,000s of guys like me, you're going to know what 95% do, want to buy, what kind of choice we pick. This is great for the company because 95% is a great number for offering goods, anything else. This, what is true for statistics, what is true in correlation, does not have to be true for me. And if it's concerning my insurance I want to pick, or if you look at the financial products I would like to buy, these statistics, this correlation, may be a fool. So we have to talk about what actually big data can do and where it's a benefit, it's a value. I admit there are possibilities. But we are very strictly opposed as soon as these are included in the way I am admitted to certain products, what insurances know about me, which I maybe don't know anymore by myself, and these are the headaches we have about big data.
I'm not going to take your question on how the supervisory authority are able to supervise this.
That's a pity.
Because I'm here as a moderator, so the question are for the others, not for the ESAs. But maybe Andreas, before asking you, can say from the industry side, what are the sort of safeguard that you put against those kind of risk that Klaus was mentioning?
Well, actually, it's all very true, and I have just to admit that this is one of the problems we have to take very seriously in especially analytics. So correlation is not causation, and that was mentioned, and that currently we have a lot of procedures in place. So for instance, that's why you hire data scientists who have a very, very scientific education to prove actually whether an algorithm is true. And it's more about algorithms, by the way, not so much about programs. Programs always fail, then you have a very clear yes or no problem. One example that everybody probably already knows now is, for instance, in telematics, there's in press brake acceleration patterns for to give you risk indications. Everybody by now knows there's a famous paper that doesn't work. It would be nice, but it's too simplistic. So if you apply real machine learning, you find much more complex patterns that give you risk indications, and they are not very pleasant, honestly. And the smooth driver, if you look at the distribution, is sometimes the most dangerous one. So they're either drunk. So if you drive very smoothly, that can mean you're a safe driver. It can also mean you're drunk, you took drugs, or you play with a smartphone while driving. And there you have super risks in it, and that we don't see in telematics. So, however, on the other side, technology also helps a lot there. It needs to be controlled, and there needs to be mechanisms in place to control the outcome of the algorithm, and then it gets a little bit tricky. If we talk about this German, and now let's see if my microphone stopped working. If we talk about this German or French, I don't remember, car manufacturer, that seems to be the trick that the algorithm doesn't recognize. I'm talking. That was only a 4-line of code algorithm that understood whether the car is on a test stop and then changed the composition of urea in the exhaust system to actually cheat in the test. And actually, it could. Stops now.
Not only me. That's
so
good.
This is how I show you how we test an algorithm, you know? Where there's some cheating going on. And you have to have mechanisms in place that tell you that the algorithm delivers the right result. I believe that's also part of the new GDPR legislation to also test the analytical veracity, whether an algorithm delivers what claims that it will deliver. And this is the big challenge for the future where we really have to go deeper.
Okay, thank you. And now, Marta, what can the regulatory authority, what can do to foster the innovation while, let's say, defending the consumer? Please, tell us.
Thank you very much, Fausto. First of all, you have asked me in the introduction to repeat my name. So my name is Marta Nagy-Rotengers. I come from the European Commission. And you have heard already our Director General of the Directorate General FISMA in the morning. So I would like to tell you that I come from a different Directorate General in charge of the digital economy and society. It is called DG Connect. And my main view will be how can we see data as an economic asset, an economic good. What can we do for the citizens, for the businesses, to ensure a balance, as I said also in my motto, between entrepreneurship opportunities, between personalized services, and the trust and the privacy aspects. It's a rare situation that the Commission person is playing for the innovation and the support of the innovation, and the company and the consumer representatives are the more critical ones. So you use more that the Commission is coming and introducing regulation. But in this topic, in the data economy, we would like to force innovation. We would like to enable that innovation can happen in a way that citizens, customers are happy, that they are satisfied, and in a way that the errors are minimized, and the resources can be reused cross-sector, cross-border. So if we are experimenting in one area, it should be useful for another sector, also for other countries. Therefore, the public sector in general can support innovation in some countries, such as, for example, in the Netherlands, in Germany, in Ireland. The public sector offers funds to experiment with big data technologies or data technologies. If I might tell you, I hate the terms of big data. I think it's much, much better either data-driven innovation or the data economy or data-driven services than the big data, because it's a buzzword, no one knows what is behind. And we saw also the diversity of the expectations here. What can, in addition to innovation, a public authority do? Of course, to work on the right legal framework. This legal framework addresses the privacy, addresses the trust, but addresses also, for example, issues such as ownership of the data or liability. If we are speaking with insurance companies, who is liable if a self-driven car is killing a child? Who will write the algorithms whether the child should be killed or the driver of the car. And these are questions which do we believe that it should be not discussed only in a region or in a country, but it should be discussed at European level, taking into account all of the elements which is needed, also by the different elements, algorithm, etc. In addition to this legislative and innovation work, we have been working also on demonstrating what data can do. So we have developed a policy, it is called Data for Policy Making, for evidence-based decision making. And we would like to support the funds in the future and the distribution of the support, at least in the ICT area, based on facts, figures, and opportunities. And this we show how it can develop decision making across the sectors also. And if you ask me not only what the regulator in general, but especially also the European Commission can do, we are doing a lot of work on interoperability, technical interoperability, legal interoperability, and also standardization to ensure that you can use data in the insurance and banking sector from other sectors, and also to show you that your data is very valuable also for other contexts. So hereby we are developing the legal framework. We are working on a communication coming up end of November, addressing the digital single market, building the data economy elements. And we are financing a large number of projects, a broad portfolio. And we have set up at European level a so-called public-private partnership for big data value generation, where we are funding research innovation projects. And one type of the project is a sectoral large-scale project idea. And I mention it to you in detail because the call is being opened next week. It's a repetition of a past call, and the financial sector was not there in these calls. So it would be a great opportunity for those of you who are interested to work together with other ICT companies to demonstrate how the big data can help you, or these data technologies, also to apply for such calls. I will be here after the session for the coffee time, so if someone is interested, I can give you more detail. I don't want to use your panel time for this. Thank you.
No, thank you. You may use our panel too. Okay, let me check if after this first round of questions, is there anyone from the audience who want to make a question? Who wants to ask anything? Yes, in that area, please. Two of you.
Can you hear me? Yes, Farid Ali from Belg. I have a question to all panelists regarding the insurance sector, big data and insurances. The fundamental issue with big data in relevance to insurance sector is that there is a switch from socialization of the risk to personalization of the risk with involvement of big data. And I would like to know which is challenging really the fundamental functioning of insurance sector so far, traditionally. I would like to know the views of panelists on this and what kind of challenges, risks does it involve? And is it the move in the right direction?
Okay, let's see the other question, please, before asking.
My name is Călin Rangu from Romania. I'm interested to see at the European level how we are intended to manage the operational risk generated by IT in general, because we are speaking now about big data, cloud computing. These are, in a way, marketing names of technologies. But the basic of the technology is not organized sufficiently in different companies. It's not necessary to go to big data if we are looking to a database. And if that database cannot be programmed correctly, if the internal fraud can be sustained or not by lack of processes, internal processes and so on, these are affecting the consumer protection trust in the system finally. A few days ago in Romania we had a big crash in a bank for 12 hours. and we saw that the lack of business continuity, how the system, IT system are managed, are creating lack of trust of people in financial services. How these things, fundamental things, are managed at the level of European Union, and after that we should go to implement big data and other big concepts over something that is constructed seriously.
Okay, thank you. Let's start. Who wants to start with the first? Maybe, please.
I think the first question was basically the question, I believe, if I understood correctly, about the segment of 1. So if assuming we have all the data available about all the people, we understand each person's individual risk, we would understand that very well. And then we can insure a person at a very low price and other people are uninsurable. And as you rightfully said, that questions the basic principle of insurance to be a society of insured people, and ultimately takes away the business model of insurance, if you will, because for some people it doesn't make sense to get insured, to be insured, because their risk is pretty low, so they can cover the risk themselves. So for instance, if you will not be sick, if you will not have a car accident, so you don't go into an insurance model, if you drive a self-driving car, who should insure that if it wouldn't have any accidents? We are very happy that it seems to have more accidents at the moment than human people. But otherwise, the Google car had, I believe I read once that it had 1,600 accidents in 1 year. We are very happy we don't have drivers like that. But it's a very valid question, and frankly, I can just give a personal answer. I believe for the most important part, security fulfills an important role in society. So the most extreme example is probably health insurance. It's very good that all the people are insured and the whole society covers, society of insured people, if you will, covers the risk. And we don't exclude that, to make it an extreme example, that tiny little girl who probably will develop cancer later on, which is very expensive, obviously. So we would insure that girl at a normal premium, would not analyze her DNA because it's probably not legal, and then everybody pays for that risk. And I think that's just fair. And also from an insurance point of view, but that's again a personal statement, I think it doesn't make any problems, because to insure high risks is no problem financially. If it's just a level playing field for everybody, no problem to insure risks. That's basically why we are there. We want to cover risks so that people are also able, in business and in other situations, to go into risks, and we cover that. Does it answer the question?
Yeah, but no? Let's see the other side.
Let's try to have a discussion, maybe even a controversial discussion. Now, I think there are two different insurances we have to look at quite closely where it's relevant at the moment. That's actually car insurances and health insurances. Now, I don't know how many of you have small children, and how do you like those guys who drive at a high speed around the kindergarten? Those are the guys who always give my blood pressure up in the highest amounts, because I just see my daughter running without any care through the cars on the streets. And those are the moments where I would love any kind of insurance which really boosts up the amount they have to pay as soon as somebody just breaks the law at the moment around a kindergarten, senior, anything else. So there are insurances where modern technology, big data, maybe can be even something good. We look a lot more curious at the health insurance. And actually there are some insurance companies, not the Allianz, which come to us at the moment who want to introduce their new tariffs, which are not yet based on big data, sorry, but I think where we experience the step before big data. I think I can name it out freely because they make advertisement. It's at the moment Generali, who is not on the German market yet, but they would love to go on the German market with it. And they experiment with an insurance and health insurance where you will be tracked how much you walk or go jogging, how much sports you do, and if you look a little bit in the future, how healthy the food you is for yourself you eat or drink. And I can imagine very well that there are a lot of young people who would actually love to have this kind of insurance treaty Is it still an insurance? Well, maybe it's more a treaty than an insurance, saying that as long as I do 10,000 steps a day and I get only drunk 3 times a year, I'm going to pay 30% less. Okay, now this sounds funny. As far as we learned, all this is no problem being done technically. We're all going to wear those wearables and fitness trackers and what else. Now, this is not yet anything close to big data. But I think as soon as we have a 10, 20, or 30% in our population saying, this is a good deal for me and my young colleagues and friends, as long as I'm 20, 25, or 30, we're going to start making those deals. And the problem is, what happens if you get older, which happens naturally, and you got a job or children or anything else where I cannot have, or where I don't have time to do 10,000 steps, and maybe I get drunk 10 or 20 times a year, or take any other example. And I think it's a kind of learning that there is something else, where the insurance as we know it, as Andreas has just described it, as a very matter of society, of social society, is kind of ripped off because it makes sense, because I'm a good risk. And when I'm a good risk, I want to get a good price. And now it's my fantasy, and maybe I'm wrong, but I think that as soon as we're just breaking down this wall, maybe not even driven by insurance companies in the traditional way as we know them, but maybe by young, aggressive, small ones who want to have a certain part of the pie, the cake, Andreas mentioned in the beginning. We're going to start to have a pressure on the traditional companies. Then we're going to have a debate on level playing field. And as soon as certain companies are allowed to implement such schemes, such treaties, we are kind of afraid what happens to the general principle. And that's, again, it's a headache. Maybe it's not my biggest headache at the moment, but it's something politics, regulatory authorities have to think about right now.
And the regulatory authority is thinking on it already, because we have already launched technology development calls on so-called privacy-preserving technologies. We will be launching 3 or 4 projects in the next days, next weeks. One of them is addressing also such challenges. And we are also working on regulation towards access and reuse of the data. And you might know that GDPR has just been adopted, and it has outlined very far how and why can be the data of citizens, customers, private context is reused. Furthermore, I would just like to mention you one case. We had a workshop, we were together also with Andreas in that workshop that was run in the commission, organized by my team. And we invited a lot of insurance companies and banks to find out what are the challenges and the ways and the threats around data technologies, data economy. And there we have learned also that very often it is also an issue of the business models. How the insurance company and the consumer agrees it. And the best example what I heard was an Italian insurer who said, I give a device to all of the car insurance consumer, they agreed, and I gave them a better and targeted condition for that. So in such cases, I see a win-win situation, because the customer gets his needs, and also the insurance company can act on it. But I see that
that's very, very similar. Actually, the health insurance case with this other insurance company, I forgot, and the telematics case with the device in the car, it's very similar because it's based on the problem of analytical veracity. So basically, it's all about the normal, the same-sized cake, and you try to win more of that cake. And I start to understand that the cake analogy doesn't go very well with diabetes. But, you know, the problem we are currently having is that if you try to win new customers in health insurance with a tariff that is especially targeted at young audience, and you have these simple stereotypes, rules like 10,000 steps below or above, which actually don't work. I think we can all understand that a simple rule like that doesn't work, because if the body of people is different, maybe 5,000 is good enough for you, maybe somebody else needs 20,000, I have no idea. So that doesn't work. That's like in telematics, where driving patterns are not that simple. It's just used to win against everybody else, and if you start new into a market, you basically cheat the competition by going into a risk nobody else can go into. And you have ultimately to fine-tune these algorithms, and why people are actually doing this, there's always a bad reason behind that. There's one reason can be you want to win against the competition, which is okay, it's not a bad reason, but another reason typically is to win the data. You want to aggregate as much data, health data about people, because that's probably very valuable later on. And they want to gain data. But what we also, now having the GDPR, we start to question ourselves is, can data be the next asbestos? Do we aggregate something that makes us pay 4%? Thank you for that figure. That gets everybody very excited at insurance companies. 4% of your global annual revenue one day, because you aggregated something like asbestos that is then later on very dangerous, and we have no opt-in or no customer consent or anything about that. And that is a question we also need to answer, and I believe the only answer is privacy by design, where we have to involve the customer, where we have to create transparency. And let's take the simple example of telematics. We need to make clear why this actually works, and we have to be in a situation where we can prove that the model works and that it has an advantage for the consumer, and to understand that ourselves too, and not only use it to create data. By the way, another problem is that you could use those models to destroy price transparency. That's a big, big risk. If you take the example of a telematics tariff, today car insurance prices in motor insurance in most European countries, especially Germany, are very cheap compared to US, for instance. And the main reason is that the prices are very, very transparent. You know exactly within 5 minutes what you pay everywhere. And if the price is in, and this pushes down, and we had this in our economics classes in school and somewhere, transparency drives down the price, which is in the, for the advantage of the consumer. A telematics tariff is not transparent. So we can't even tell you at the beginning of the year what you will pay at the end of the year. However, you certainly cannot compare AXA versus Generali versus, I don't know, whoever. So this is one of the secret things behind that might be very dangerous at some point, and ultimately also be illegal as far as I understand the GDPR.
No, I think Andreas is just doing a terrific job as a consumer protectionist. I think I'm going to try to hire you afterwards. Probably I cannot pay you. But I wanted to disagree to Marta, because it seems so simple to say it's a win-win situation. Because it says that who tells us what is a good way of driving? If you just stay at this example, just not looking at all the technical problems at the moment. It tells us that my insurance company tells me, teaches me, educates me how to drive. Do we really want that? Again, I go over to the next thing. Do we want that a health insurance company tells me how to eat, how to behave, how to do sports? So I actually do not feel good with win-win situations with only an insurance company and the consumer. Because what we learn in all our consumer markets, that we are not on an eye-to-eye contact. It's always the company who is in a favorable position because they know more about me. As soon as it's concerning data, again, if a bank is allowed to look at my bank account for the last 20, 30 years, they know things about me that I do not remember anymore. So again, I think we have to look very closely that we need regulatory authorities, that we need politics on a democratic basis who actually has to make certain decisions. You named it by yourself in the beginning. If you look at automatic cars, who makes the decision in an accident case, which nobody of us wants to, who is actually the one who gets injured or something worse. I cannot imagine that this should be decided between me and my insurance company. How should anybody make this decision? I actually don't think that the insurance companies want to make this decision. I don't think that the car companies want to make this decision. You know, you have Fiat who decides like this, and Daimler decides different, and Volkswagen in a third way, and Toyota in a fourth way. Oh God, how can this be? And maybe even they decide between different countries differently. Woo. So we definitely need a kind of a regulatory, political decision on certain topics. That's because we have politics for.
Where to fix the line, let's say, but just allow me to make a small statement from our side. If I have to go towards a model where insurance company will teach me how to hit, I will go for an Italian insurance company. Just forgive me for. Anyway, as we see, there are a lot of important ethic question also to be solved. I see but one question that I would like to pose to the audience is the second for the technician question, because everything seems to be based on the capability to share data, to use the data from the people. And so my question to the audience is, would you be willing to share your personal data with financial institutions? Quite, again, a simple question, and you may answer yes, no, maybe. Please vote. Okay, please continue to vote. Okay, let's see the outcome, please. It seems that a lot of you. So, Klaus, what is your... do you think that there is enough awareness among the people and consent? This is just because this audience is a very selected one, so there is such a high number of yes, or maybe they are not aware and there is such a high number of no. Please, what is your feeling?
Well, it's probably not as simple as that. I would just make the joke about telling you how many consumer protectionists are with you, how many representatives of companies, and how many scientists, and you can put yourself to each. No, okay, just kidding. I think actually that there are no real offers in the market at the moment saying that my bank or my insurance companies comes to me now and tells me, okay, give me all your data, and I'm going to give you a discount on products or services. Not yet. We know that nearly all companies are thinking about it, that all companies have certain pilot projects where they do so. We had an example from Austria, we were presented, we have an example from Poland, and they were actually quite incredible because my bank account in the boring Germany is only black and white. There's nothing I can play with, there's nothing I can do, I can just see what the figure is and probably I don't like it. And those pilot projects from Austria and Poland, they were quite impressive because they gave us the possibility actually to analyze my own behavior, what do I pay for electricity. And the more data I gave them, the more they could tell me, ooh, you use a lot of electricity, that's not good for climate change. And they can tell me that there are 4 people living in my household and you're at a very expensive electricity company. Is this helpful? Yes. For me, yes. And I can imagine for a lot of consumers too. Now it gets touchy when this certain bank, they showed us, I think it was the one from Poland, instantly offered me to switch my electricity company because they noticed that I'm too expensive. And they only offered me one electricity company, and it was only one click away. Now this gets touchy because there is no real competition, because we learned that this bank has a certain on provision-based treaty with this one electricity company. Ooh, would this be the best choice my bank is offering me? So, I think the debate is starting. There are only a very few consumers who have real day-to-day experience. Asking the bank who is actually watching what they are doing, they said at the moment nobody, because the financial authorities say switching electricity companies, that's not my mandate. That's nothing which has to do with the job I am emplaced for. So as soon as financial sector is looking on more than their traditional business, who is watching over the quality? Okay, it's us, consumer organizations love new challenges, but that's actually not the only answer. So it's moving, it's interesting, it's a lot of challenge for public debate, for scientific search, for quality debate, and for authorities to say, okay, if a bank opens itself to new kinds of businesses, who looks on their fingers?
I may tell one experience we had in Italy. Yeah, just a recollection from my side on the use of the consent to be checked daily. There is in Italy still a black box, the possibility to have a discount of the car insurance, and effectively it happens to be that the vast majority of people who are willing to share their data are from that area where the prices of the car are very high, of course. In that case, there is let's say an example of consent and use. But please.
Yeah, I think also to answer your point, I think that's valid, but I also think big data has the advantage that also empowering the consumer. So it creates a lot more transparency on prices, and I would also assume, honestly, I think not all consumers are stupid, and if a bank offers something today, you can also maybe Google or use some other tool to understand what is the fair price comparison. And that's also today really at fingertips, so it's very easy to understand the price, so it empowers everybody. I think regulation, personal opinion would be they should just make sure that it's unfair treatment and intransparency is not possible. But otherwise, it also empowers consumers. People are clever, people can Google, people can compare prices, and there are more and more tools where you actually can do this and understand where you are.
May I disagree? Now, this is a general debate we're having in consumer politics, I think, for years now. Are we, when we are true and honest, actually this rational as we should be and as we would love to be? Now, if we look, just to stay at the electricity example, I only know the figures for Germany, it's so easy to switch your electricity company. It's no problem at all. And we know that, at least in Germany, probably everybody else in Europe is a lot better than we are, that only a very small minority of Germans actually do this every year. And the vast majority, especially the ones paying high prices, are sticking with the electricity company, and they're just too lazy to do it. So again, I would love to empower consumers. That's the reason why I'm here. And I actually agree, it's a lot more easier than 5 years, 10 years ago, no debate about it. And I think it's great if there are companies who actually make it more easier because they offer switching platforms or whatsoever. But I think it's only fiction to believe that the majority of consumers actually is as rational as we want them to be. And if you look at certain groups of consumers, the consumers who have problems with language, with education, with knowledge, and sometimes if you look at people who migrated just to another country, who are just not comfortable with the things which are possible in a different country, if we look at them, they are probably, on realistic terms, a lot more lazy than we would like to have them, which is a problem for competition. If we would have active consumers, we had more competition, we would be putting on lower prices, which would be just great. But it's just not reality.
I'm sorry, but as a citizens, I would not like to be put in the box who is crazy, lazy, and it goes always only for the cheapest, for the cheapest one. Also, in general, I agree with you that transparency is important, but it has a reason why many people do not jump from one service to the other one. It has reason that if someone shares the data and gets better personalized services, for example, in the diabetes case, if you get for these better treatment, also better support from your insurance, health insurance company, I would not see these people as a crazy. Sorry, this is my very private contribution.
I said lazy, not crazy.
No, honestly, I also feel a bit lazy because it's also a question of quality of our life. If we need to spend all our time to change insurance or electricity every time that there is a possibility to save some money, I don't know if the quality of our life will be. The important thing is to allow and to make sure that they can do this. This is, for me, paramount. Then, it's up to them. Anyway, you want to react? No, please feel free to react. But otherwise, Marta, please, compared to the question I posed to the audience, it seems to me that in any case, despite the outcome, the data are used, basically. So maybe they simply don't know that they are already giving data to the financial institute to do. So what can we do in terms of policy or in order to enhance the awareness on this for the consumers? What can be done to let's say alert on this possibility or this risk?
I was very happy to see the result of the panel and also the balance between the first two, because it shows, of course, that the community here is dealing already with these ideas, also as a person and also as an entrepreneur. So in that sense is very good. What can we do? Of course, I was mentioning before about the legal environment. We are looking how data exploitation rights could be used. We are discussing different options, whether it should be the device user or the investor into the technology, or who should be get the right to the data exploitation. We will launch a broad consultation on it, on the different options, most likely end of this year, to come up next year with a more concrete, also legal suggestion. As I have mentioned, we are investing in privacy-preserving technologies to help citizens, but also to their companies to be able to offer these services which apply to the new GDPR. And we are working with other member states together also on a concept some of you might know is it is known either as my data or the personal information platforms, where some member states, Estonia has started this idea, for example, that the citizens can put their data to a certain place into the personal information space, and they can decide and define which institution for which purposes can use this data. And imagine the situation if you are moving house from one to the other city, you don't need to go to 10 different utilities and offices, but you once change it to tick the boxes and your address is automatically changed. And this is the same of sharing of birth certificate if you need it for school purpose or for other ones. And we believe that this concept of the personal information management idea could go beyond also the public sector related ones. So could go beyond the very strict person related data, and could be enlarged also to preferences, and it could lead on the long term with double could also to the development of a kind of data markets where in aggregated form these data could be reused. And if the optimization of the energy networks could help for these, or you mentioned the environmental impact, that would be a good one.
From a hacker perspective, it's very nice to have all this very sensitive data in one single place. But I get the idea, yeah.
Do you all feel very good with this perspective? Now, okay, well, I'm not living in Estonia, so it's difficult to talk about it. And there, at least for Germany, and I think for probably a lot of other countries, I need to spend a lot of time if I switch houses or move from town to town, which is not a very great thing to do. But as soon as those data do not stay within the public sector, I think you just mentioned something like a data marketplace or so, I don't know if I feel so good about it, because somebody uses the data for something. Now, traditionally, we talk about advertisement. I do not actually have real major problems with advertisement. Just send them to me and I throw them away and that's it. But as soon as there are companies, maybe my next employer knows something about me I don't want him to know. My health history, or how I get around with my budget. And this future employer actually thinks, woo, maybe I don't like this guy. He looks good, he sounds good, that's okay, but he's not good in his health or whatsoever. So I think there are very good reasons we're having the data protection guidelines. And I do not feel good if there would be an open or private market on my data, but maybe I just misunderstood you.
I think so, because the fundament is that the GDPR is there, and it would be not. But it would be offering this private, also the private reuse of these data in context, if the consumer has the consent. And to your example, and also to the hacker, that I would not like to have all of the data together. I mean, I suppose you have a bank account. Oh, can you live with that the bank knows whom, when, how much money do you send? You can live with that the bank knows how much money do you earn?
At the moment, the bank knows it, but it's not allowed to do anything with it, and that's okay.
But to defend that idea, I think there's also ways to make that very secure, and that is that privacy by design, typically the data is not in one single place, but it's only the encryptions that are shared, and then you have to hack all the encryptions, which is not possible. And there are very secure implementations of that, not hacked so far.
I'll give you another example. I think I trust most of the traditional banks on that. Because I think that if somebody would succeed in hacking it, I think their damage on reputation would be so immense, I hope they have enough security. Now, when we meet with fintechs at the moment, they do not actually want my money, they want to know about my money and my transactions. So they actually do not have to protect money, but only data. And when they show us their security measurements, they are a lot lower than a normal bank or insurance company has to fulfill. So if you look at all those debates on, for example, in Germany it's called Sofortüberweisung, which is a company wants to manage my transactions between banks. I don't know if they have the same amount of data protection as my bank has. So again, we're talking about level playing field debates. And I want competition, we love competition, but it has to be on nearly the same levels of security. And at the moment, I'm not convinced if all the fintechs who want at least my data have the same amount of data protection my bank has.
Do you want to react, Marta, on the level playing field?
Not necessarily. Someone would like to?
Yes, maybe the audience.
Thank you. Thank you very much. I'm Noemi Papp from the European Banking Federation. Thank you for this interesting debate. I would like to take the opportunity to ask this question about the value of data, because there are like many discussions on whether you have access to the data for free, so that means that maybe your data are not like having so much value, or the question is like, I'm talking about the banking sector also, why they are not so keen also to share their data is very much because they add value also to with different analyses they are conducting to the data of their customers. And sometimes we have the feeling that maybe some big companies, American companies, are collecting data for free, and this seems not to have like a big value when like they want to, maybe some companies want to have access to banks' data, which have a lot of value. So just the value of data, I think, should be also considered. And I was wondering whether the European Commission is planned to look at that in the context of their work on the access, reuse of data. And I would like also to have the feedback of the consumer organizations on what they think about the value of data as well, which should not be placed on the same level.
Okay, I saw another question here, another one there, please.
Yes, thank you very much. My name is Monique Goyens. I'm from BEUC, the European Consumer Organization. I first would like to suggest, contributing to the lazy consumer concept, that there is a very well-established and traditional concept in behavioral economics, which is called consumer inertia. So this is something you have to work with, and if you ignore that concept, you are not in real life. What I would like to say on big data is, have you already looked into the issue of the more data you have about a consumer, the more you can go into individual pricing and dynamic pricing, and that can also lead then to price discrimination. And a third point is about the reference being made to the fact that, in fact, it's the data subject, it is the consumer, who is the owner of the data under GDPR. Now, the problem is, this is also a little bit theoretical, because if I want to have access to a service, I need to tick the box that I agree that I can give away my data. So how can you really effectively protect the consumer who would like not to share their data? Thank you.
One there.
Yes, hello, I'm Martin Schmalzried, representing families in Europe. I just wanted to go back to the very first example on diabetes and the cake. I think it's kind of the, the line we're following now. And I wanted to talk about behavioral sciences and nudging, because nudging is also based a lot on big data and insight into consumer behavior. And as you know, the more data you have, the more you understand how humans behave. With the development of behavioral sciences is a booming field right now. And in the diabetes example, it's interesting because from the moment you're born, you're a kid, you're being nudged to eat a lot of snacks, a lot of cake, as we've talked about cake, a lot of sugary foods. So then eventually you develop diabetes because you've been bombarded and nudged into consuming more. And then you sort of you're punished double because you have to change your behavior because you have to optimize the risk of people that develop diabetes. So in the end, we're edging towards a society where people are going to be nudged in all kinds of directions, acting irresponsibly and irrationally just because somebody has to make money, and at the same time being responsible because you have to hedge risk. And this is a very dangerous development. So that's one thing I want to say. The second point is data generates its own effects, meaning the way you design your algorithm is going to have an effect on people's behavior. To give a concrete example for financial services here, if you assess the ability to repay for people, creditworthiness assessment, if you only use successful repayments of previous loans, then a consumer that has only paid with his savings for everything up to that point where he takes out his first loan is deemed not creditworthy. That's one example, for instance. Another example is simply consumers will know what kind of data you use and they'll adapt their behavior. People will start putting pedometers on their dogs, instead of wearing them. You have all these, there's a real dangers if you go into this kind of the trend. And the last point I wanted to make is analysis of the data is always done by humans. If you look at, for instance, the analysis of the police in the US that are trying to identify dangerous neighborhoods in the US, of course they'll say, well, the black neighborhoods, they're the most dangerous. And so what the reaction is, we have to search every black person, they're more at risk of committing crime. instead of thinking differently, maybe it's the poorest neighborhoods, the most excluded, the most marginalized, and the response would be different, and maybe you need to help them, maybe you need to help them get out of poverty. So the way you interpret the data also is completely sort of conditional to humans.
Thank you. Who wants to start to answer?
I can. So the first question was about the value of data and versus access and privacy. First of all, again, a personal statement. I think data itself has no value. It just costs you some money because you have to store it on servers, and that price is going down, obviously, especially in the cloud, but it has no value. The value is, and also the statement that data is the new oil has been taken back by the lady who made it first 5 minutes after her speech. So it's all about what you make with the data. I also understand the GDPR in a way that there is no data ownership anymore. From a legal perspective, I'm not a lawyer, I might be wrong. I understand there's only a data controller and a data processor, which means we will have a situation where whoever creates and controls the data, especially if it's a human person, controls who will work with that data to achieve something. And that gets us to privacy by design. So privacy by design is all about I can control the data I create, and I can transparently see the value that is created from that data. And if I like that, then it's good. If I don't like it, then I can switch it off and take away the access rights I granted for the data. Privacy would also be respected, because what we also introduce is and we currently work very heavily at Allianz to implement privacy by design. It's also possible now to share data anonymously. Obviously, and that goes also a little bit to the last question, that is very closely related to the analytics you're actually doing. So it depends a lot whether just taking away the name anonymizes your data effectively, or whether you have to take much more advanced measures. So for instance, if you have trajectories 24/7 of people moving with a smartphone, then you basically understand everything about the person, because you certainly understand where the person lives, where the person works, where the person has certain points of interest, goes for shopping, and by that understanding, merging with external data, and that's basically big data, you will understand who that person is, and you can unveil the name actually very fast, and that's proven in a ton of papers. However, you can anonymize that, and Apple did that, for instance, in a way. If you move with an iPhone, you probably know that iPhones are quite secure, that the journey is segmented in 15 minutes journey, so only those 15 minutes are known to Apple, and all the segments of the journeys, the hash codes that connect them, are stored only on the phone, so only your phone knows where you go. Apple only knows 15 minutes of that journey, and that doesn't tell them anything, because lots of people are moving in Paris. So there's always something you can do to make it secure and to secure the access. And these are also ways, that was the second question, to control price discrimination. I think the GDPR is actually, while it is very hard for us, or at least me, maybe to deal with it, it is an answer from consumer perspective to most of the questions I see. So it's difficult, but it's a strong instrument, I would say.
Please, Marta. I might add to the value of data, because you have asked also the Commission or European perspective on it. Indeed, we started already 2012 working on the focus on value, if we speak about the data. Just as an example, my unit was called until end of June data value chains. And the goal was really to generate added value of the data. In the past, data was collected for a certain purpose, and very often it was used once, and we didn't care about it. Nowadays, the data is collected for a certain purpose, or is collected, and we are looking how can we make added value out of it. Not necessarily the personal data, but if you look, for example, non-personal data in that context. For example, to use the meteorological data to optimize the electricity production, to understand which is the expected need for heatings and electricity in the cities, not to generate unnecessarily energy and electricity hereby. So the value of the data is very important. Also the PPP, what we set up, is called Big Data Value PPP. And the goal is to generate added value from the data. And I would not focus at this stage on the value, what does it cost, the unit of the data, but which kind of added value can be generated. I agree with you that the pricing of raw data is very difficult, but as soon as we process the data, we come closer to insight of the data, and it could come to this additional insight value. What is also important in the pricing of the data, as a public sector authority, we are already asked, okay, if the data has value, if it's an economic good, what is the price? And if we have a price, okay, then it would mean we have a market for data, not for the personal data, but in general for the non-personal data. And how can the pricing be defined? And the colleagues dealing with taxes arrived, okay, if you have a price of a product, you have to have taxes. How should be the taxation for this data? So they are all questions which are far ahead of us. So we have started to deal with it, how to develop ecosystems in the data which help to deliver services for citizens, personalized services also, for industry to help solving also societal challenges. For example, in the healthcare, by if we have anonymized health data of thousands of people having the same disease, a better treatment possible. So in that sense, the value of data is there, but to see in monetary terms how much euro or how that would be difficult. And for the sharing of the data from your questions, or tick the box for the privacy one, of course, we had a survey how many people read it. It was, I think, 99% or 98% were not reading, just ticking the box. At the latest dose, they opened it all, they recognized the length of the document and capitulated. So lawyers and maybe consumer protection agents use it. This is not negative. I am very happy that you do it. So this is very important for us. And what we would like to do, we are working also on, you call it privacy by design, we call it privacy preserving technologies. So looking for solutions put together with the data, metadata, identifier, etc., where we can already embed in the data these privacy elements. We don't have a final solution on it, but we have started working and try to find solutions, technical solutions, supporting the implementation of the GDPR.
Well, I hope you all know this example. I think it was a conference in London where they did this experiment. When you tick the box, you actually agree to selling your firstborn child. Nobody complained when they applied to this conference because nobody has actually read the general terms. Now, I'm very sure ESA would never do such an experiment with us today. Okay, so far to lazy consumers. Now, I perfectly agree to Marta what she said to non-personal data. But I think it gets more interesting or more touchy on the value of my personal data. And actually, in the consumer movement, we have maybe a fraction of economists who say giving data a price can be a great solution. It worked in the environmental movement. You all know giving a price to forests and climate emissions and so on. You all know the debate. Yes, it's kind of working. I think the majority of consumer agents would say, ooh, that's a little bit difficult. But if you think it on, the next step is actually the value of your data, and your data, and my data the same. What happens if companies would actually say, well, the guys of you sitting to my right are a lot more worth on their personal data as you guys on the left. So I can actually imagine that if we think it on, giving you the possibility to make business with your personal data and collecting money from it. For example, telling Google, every time you get the data when I use your search engine, you pay me for that. I think this could be a very strange debate on terms of justice and fairness. So I actually think it's very interesting, but very, very difficult. I wanted to highlight on one question Monique asks, because what happens if some of us do not want to share our data? At the moment, I think it's no problem at all, because we are the majority. But if you go in 5 or 10 years times ahead, when it's the usual case that the majority of our society shares their data, what happens to the minority who do not want to share the data? So actually, again, looking at regulatory affairs, I think we need a kind of a right, a non-discriminating right, if I do not want to share my data, because it's probably that I get more expensive for an insurance company if I do not want to tell them about my sickness, not enlarging the cake. So I think we have to look at that. And there's a last point where we like to look at the moment that's concerning platform economics. If you look at all the Airbnbs, the eBays, on and on. I don't know how many of you use Airbnb. Raise your hand. Okay, enough. So you all know that you have a profile on Airbnb because everybody where you spend the night is going to judge you and tell how well you have behaved, which is great because if you want to sleep at my apartment, I'm going to look, oh, okay, you're good, you're good, you're good. Oh, no, you've got drunk 2 times and left my apartment in a mess. I do not take you. Now, this means that if you're a well-behaving person, your data on Airbnb has a value because you have slept 10, 20 times in somebody else's place, you have behaved 10, 20 times perfectly well, then it's very, very probable that you're going to do the same thing when you sleep at my place. And if there are 2 of you trying to come at the same date, I'm going to pick the one who behaves better, logically. Now, what we actually talk about and lobby for is that you should get a chance to take your personal profile with you to another competitor, saying, well, you've behaved great at Airbnb, I want to go to Wimdu, I have no time to sleep 20 times at a window apartment, but I want to keep my track record with me. So talking about portability is probably one of the most important points on terms of competition. If I have been a member of Allianz Insurance Company and I want to switch, what I would never do, or I want to switch from somebody else to the Allianz, better example, and maybe it helps me to take my personal data with me, which is actually quite valuable for the Allianz, knowing that I'm a very good driver, which is something not so fancy at the moment.
But I think that's part of the GDPR.
Yes.
By the way, currently that's one of the parts where we have a problem how to actually implement it. It's difficult, but that's part of it's covered.
Okay, let me check if there are other questions from the audience. I saw one question there, please.
It's really a point that I want to make. I have to disagree with the point that was made that data does not hold value. It very much holds value. You only have to take an example of the supermarket. Sorry, my name is Dermot Jewell. I'm from the Consumers Association of Ireland. If you look to the supermarket structure and sector that introduced so-called loyalty cards many years ago, what they do is they offer a point for every euro or dollar spent. But the amount of data that they mine is phenomenal. They know the time of day, the day of the week, the month of the year, what you buy, how frequently, when you have a change in your family. So it's worth quite a significant amount of money and value to them. And when that stretches across into a change of structure within the business, which is, for example, they move into the telecoms, they move into the financial sector, you start to see how all of that information is of very, very high value. And it's really important. And I think also the point in relation that was made earlier in relation to who is interpreting the data is very, very important. I'll be a little flippant here, but if you were to listen to what my colleague Klaus has said, you would understand that there are 2 reasons now that give rise to headaches for him. He has an unhealthy appetite for cake. And lastly, there is a difficulty there where certain drivers give rise to blood pressure increase for him. So we've got to be careful of who's interpreting that. These were statements, but the point being, it can go off the track. And unfortunately, I can see it going that way. Thank you.
Just one comment. I said data per se has no value, and I think that's still true. You have to make some value out of that, and that's through analytics. In your example, it's a very simple analytics, but I talked to a large pharmaceutical company who owns petabytes of patient data collected through mass spectrometers about proteins in the body. Today it has zero value, but they ultimately want to cure cancer with that. So the analytics is not yet known, so zero value. It just costs millions.
Maybe just the last question.
My name is Bruno Gabellieri from EIOPA Brussels. My question to the panel is why the value of Facebook, of Google, is so high?
Oh, that's
market value.
That's very easy, because if you want to, I'm on Facebook, so if you want to place advertisement, and you want to get a guy who likes to go diving. How many of you like to go diving, scuba diving? It's less than 5%. So if you make advertisement just on this screen, you pay a lot of money for only 3–5% in this room. That's a bad deal. If you place advertisement on my Facebook profile for a great scuba diving trip around Christmas, I'm right the guy you want to hit. So you pay probably less than for the advertisement for those 400 people sitting in this room. I don't know how much ESA would charge you for it. You place advertisement on my Facebook profile, it's a lot better deal for you. That's the reason because, well, Facebook is so valuable.
Okay, thank you. Thank you. Just let me thank the panelists and close the session because we had other questions, but it's, the time is now to close. I just want to remind that as ESAs, we are working on this subject, of course. We have a joint working group which will produce a consultation paper, hopefully by the end of this year. So the debate, I'm sure, will continue on the basis of your input. Thanks a lot, really, for the interesting discussion and the genuine behavior between us. Thanks a lot, and let me allow you to have a coffee, 30 minutes for coffee, and then we will reconvene at 3:45 for the last panel on the enforcement. Thanks a lot.
I'll have to get around a bit and make more contact, which will be good, but that's a lot. So I guess it means you really got to count on your team to be very good and to
ladies and
execute
gentlemen,
when you're away. Yeah.
Can I be heard?
Do you know that?
Ladies and gentlemen, welcome back. Ladies and gentlemen,
I'm going to meet.
It's not working.
Yes.
Yeah, I think it needs some.
Okay.
I think now it's
Ladies and gentlemen, I'm switched on now. I tried it several times. The technology is now working. I was just switched off, I realized. Welcome back. I'm honored to be able to open the last panel discussion for today. And we are very honored altogether that the audience doesn't seem to be fading away in the Friday afternoon. And the good news is that even after this session, you will have the opportunity to continue discussions, and there will be coffee served outside. The last panel of the day will have a specific focus on the supervision of consumer protection requirements in the EU. And we will do this by using some specific examples of requirements that have been developed by the three ESAs jointly, and all three of these packages or these products are a result of a very interesting and long and rewarding exchange of views between the experts within the three ESAs as well as the competent authorities coming from different angles. And they are examples of the common efforts of the three ESAs to eventually achieve a better consumer outcome, to contribute to ensuring the level playing field in the EU, in the industry serving consumers, and also to contribute directly and indirectly to the better functioning of the single market in financial products for consumers. The topic was chosen because we have already talked in previous years a lot about actually developing these requirements, what we develop and how we develop it. But now we are reaching a phase that some of these products are out there. They are close to implementation either in EU law directly or in national practices in the case of guidelines. And now we are turning our focus to actually supervising these requirements. And I think a number of interventions before mentioned that the best rules are, even if we have the best rules, their value can be very minimal if they are not put into practice, not enforced, and not supervised appropriately. So the focus of the last discussion of this panel will really be on what the expectations of the different stakeholders, including the supervisors themselves, the industry, and consumers, what these expectations are from when these requirements are put into practice and put into daily supervision. The three topics we will pick, or we picked, or the three set of requirements is, first of all, the POG requirements, the Product Oversight and Governance requirements, which is a guideline and some advice developed by the three ESAs, and it's expected to be implemented early next year. The second will be the KID under PRIPS, and I think we have already talked about that a lot. And the important thing is that we are not going to try to resolve the issue of how the KID should look like, but we will assume that it is eventually agreed upon and it goes into operation, into practice. And the third one is a product which the ESAs developed with respect to how sales incentives should look like within financial institutions, so that the staff of the different providers are properly incentivized to enhance the benefit of consumers out of purchasing these products. So we will use these specific examples, how we see that they are going to be put in place, how they are going to be implemented by banks, what supervisors are expecting to do, and what consumers have as far as expectations when these requirements are under the supervisory regime. We have three distinguished panelists today representing the three stakeholders I've just mentioned. On my left, Monique Goyens, whom I think everybody knows, but just in case not, I introduce her. She's the Director General of the European Consumer Organization, which is really trying to be an organization of a number of more specialized consumer organizations, but coordinating the efforts at the European level. She's a very frequent speaker of conferences, and she has been engaging with the three ESAs through different channels, formal and informal channels, for a number of years now. Next is Cyril Roux, who is the Deputy Governor of the Central Bank of Ireland, with a very unique experience of being in charge of supervision in an integrated supervisor who has got responsibility for the prudential well-being of the financial sector in Ireland, as well as for the consumer and market supervision of the market. And also he's involved in the ESAs in this capacity, so he knows us inside out. And also Matthew Alderfield, who is currently the Group Director for Conduct, Compliance and Operational Risk at the Lloyds Banking Group, but he has recently decided to make a move, and it was unrelated to Brexit at the time, but decided to make a move to the Nordea Group, where he's going to be the Chief Compliance Officer very soon, so he will remain in the same area. And the background of Matthew is that he used to be a supervisor. Now he's in the industry, so he has got an excellent prospect to see different sides of the coin on putting these requirements into place. So I think we have an excellent panel. But before we jump into the discussions, we would like to have a small introduction of the audience as well for the benefit of the panelists. You can call it collecting big data. But we would like to ask you to reveal your affiliations in terms of which group of stakeholders you belong to. So the first question which will be asked on the voting machine is just to give an idea to the panelists of the composition of the audience in terms of affiliation, so that we know who is stronger and where we can expect some interesting questions from. So if I could ask you, could you use the voting machine to indicate your affiliations on an anonymous basis, so there are no data protection issues? Yes?
Very tricky, because you have 3 is industry and 6 is financial firm. Yeah, so industry, what's between 3 and 6? That's a good point. And then EU institution is 2, and international organization is 8. So you've got to vote twice.
Okay, I think.
Yes, you'd be.
I think we can try to close the voting. I don't see the number of responses, but I can see. Yes. Okay. So we can see that we have a lot of supervisors and regulators. Interestingly, I can see that we will receive a few letters from consumer organizations next year to improve the balance here. But we also have industry well represented and also other financial firms. And consumers as well. So I think it's if not a perfect balance, but it's a strong balance. So this is the composition of our audience. So with that, I think we can jump to the first topic and start the discussions immediately. And before we ask the panelists to give their perspective, I would like to introduce the product oversight and development product or guideline which the ESAs developed, and I will try to be brief. The motivation of trying to issue such a paper was really the observation which we have all had that conduct issues came to the focus of supervisory activities in recent years, especially after the crisis. And we could also observe that significant consumer detriment was caused by the wrong or not perfect conduct of these of different financial services providers. And to make it very biting, this has resulted in very significant fines and other redress costs, or we call them conduct costs, that amounts now on an aggregate basis to hundreds of billions of euros altogether. This has led the ESAs to look into this, and what we identified was that a main cause of this consumer detriment and these conduct issues or conduct problems which came to the surface very strongly in the course of the financial crisis was related to product oversight and government. How products are designed, how products are put into the market, how products are monitored and observed, and the entire internal governance structure of new financial products aimed at consumers is a key issue. So we jointly decided to develop these guidelines, and we are expecting these guidelines to be put in place, as I mentioned, from 2017. So the topic of the discussion will really be to show what these requirements are and what we are expecting from the implementation of these requirements in practice. But before that, I will pose another easy question to the audience, and I think it's a very easy one. But let's see what the outcome is. And the question is: are you content with the way how financial institutions design their products and services and bring them to the market? And one answer is yes. The other one is no. And for an escape, we have a no view option in the on the screen. Responses now. Yes. It seems to be an easy question, but let's see. I think we can try to close it. We have reached 200 answers, so let's see. So about 22% of respondents are satisfied with the way financial institutions are designing and putting to the market these products, but the vast majority expressed dissatisfaction, which was what we expected, but we did not want to influence the vote. So let's see very quickly what these requirements are, but I will not go through them. Just leave it on the screen, which is a sort of summary slide of what the requirements are focusing on, what we jointly produced, and let me ask the panelists of what their expectations are when these requirements are put into practice. Let me first give the floor to Cyril, I think, as a supervisor. So how do you plan to supervise these requirements when you feel that the industry and you are fit to start supervision? What are your plans in the way of supervisory practices to supervise these requirements?
Okay. Good afternoon, everyone. Just before explaining how we supervise, I think because when we supervise this and other things at the same time. And I think one element in common with project oversight and governance and sales incentives and kids is that the three elements are actually each part of a bigger whole. So, for instance, product oversight and governance, we see them in the Central Bank of Ireland as part of of governance requirements, and governance requirements very important in the way we supervise and hold firms and their management to account. So it's governance of one element, products, and but it's part of all the governance work that we do. At the same time, product oversight and governance is part of the product work that we do. So it's very good to have put the emphasis on the design of the products, but there are other elements in the product supervision, so to speak, that are to be considered. So really we're at the interplay or the place where governance requirements and product requirements are meet. And that's this reflection informs the way we will supervise these requirements. So first of all, our expectations for this, as for anything, is that the industry will adhere to the guidelines, to requirement. Central Bank of Ireland has always complied with the guidelines of the ESAs. So I think we have a stellar record of always saying we will comply. And don't explain why we're not complying. And we expect that the firms do the same. Or in some cases, you can explain that your business is so special that you do things differently to achieve the same objective. But in the main, we would expect firms to adhere to what is embedded in guidelines. So what do we do to get there? We do supervision, strictly speaking, but we do more than that. First, I think for anything new, we're not going to, you said that it's going to be introduced or come into force in January of 2017. We're not going to go into firms in February 2017 and then find breaches. It's not the way we work. We know it takes time for people to embed, and so we try to accelerate this by creating industry awareness. We engage with industry. We go to industry events. We speak. We organize events ourselves. So we spread the word, and we stress the importance of these guidelines through industry engagement and representative bodies. Then there's work that we have to do ourselves. So we have to embed these requirements in our own supervisory process. So we have to train our supervisors in understanding these guidelines so that they can supervise it. And how do we do our things in-house? But we also rely on you, Adam, and the other ESAs, because the ESAs are a really good place for training of supervisors, and the supervisory convergence at that level, at a coalface level, is grounded into having supervisors learn together how to supervise that. And then we do what others do, what industry does. We find where it is most relevant for us. Where are which companies, which products for which companies, which product it is most important that these governance guidelines are being embedded, and we go there. So we do that work as well of selecting through a risk-based approach where it is most relevant. And then we go out on the field. That's good supervision is a combination of desktop to prepare, but then you need to go into the companies. Because this is, if you want to see product oversight and governance working, you need to go in the offices and you need to ask questions and you need to meet people, and that's very relevant for this as for any other thing. So I think being present and an assertive risk-based supervision is our motto in Ireland. It was a very good motto, I think, introduced by my predecessor, Matthew Elderfield. So we still live by it for this as for many other things.
Thank you, Cyril. Very interesting because we are really at the dawn of implementing these, and as we all know, this particular product of the ESAs, as it is a guideline, it is really relying on a consistent and good implementation by the national authorities. Now I will turn to Monique and see that from a consumer perspective, what your expectations are. You know these requirements. You know you identified a lot of issues. You know what consumers feel problematic or something that needs to be addressed. So I would like to understand what sort of expectations you have from these requirements. How much you think these requirements, if they are put into place and into practice, will address the concerns and also the actual consumer detriments that we have experienced so far. And after you, we will leave it to Matthew to sort of respond of how banks are implementing these and how they are preparing to implement these in practice to meet the supervisory and consumer expectations and to eventually to improve the outcome, the consumer outcome. So, Monique,
yes,
please.
Thank you very much.
And I think you have got some slides, yes, so we can run these slides in the background.
I would like to make some general remarks before, and even if I'm a traditional participant to this to the Consumer Protection Day of the ESAs, I really welcome every time that it is being organized. I would also say that I really welcome very much the outreach that the three ESAs have made to consumer organizations. We really feel now to be considered as a legitimate stakeholder. The balance is sometimes difficult, but that's life. But this is certainly something that I would really like to stress. In the slides, I won't comment on them because they are self-evident, but there will be every 20 seconds a slide that just shows some scandals of mis-selling to consumers of financial products, such to show that we are not speaking about theory, but about real life and real consumer detriment. And for us, supervision and enforcement is, of course, key. And I'm a little bit shocked when I hear Cyril say we must give them time to implement, because the financial sector is the sector where an effective supervision system at a European level, or European-wide, let's say rather, is still lagging behind. We have it in the food sector. We have it in the toy safety sector. We have it in the pharmaceutical sector. We have it in the car sector. No, forget about that. We have it in other sectors, in the product safety sector. So why does it take so much time to have a well-functioning enforcement system for the financial area? So that's a question, because when you look at it, and that's a little bit our expectations, currently consumer trust is low in financial products. We have seen it in the last consumer market scoreboard, still scoring very low. Consumers don't trust. Products are overly complex, and they don't, in fact, deliver towards consumers' expectations, and even less towards promises that have been made. Some of the products are toxic. This is not a consumer-friendly market overall. Consumers lack adequate advice. And we'll come back to that later maybe, this is in part due to the fact that there is a huge pressure on providers, on sellers. They are being called advisors, but in fact they sell. They have a wrong incentive system, and this wrong incentive system leads consumers to the wrong choices and to products that are not suitable to their needs. And I repeat that, and I will come back to that in the last part of this session. Enforcement is not strong enough. And this is due, enforcement has no teeth, not enough teeth. When you look at the requirements, many of those requirements are common sense, don't you think so? It's just common sense. Why? But how is this going to be enforced? Everything depends on the manufacturer, which I find a funny name for a financial provider, but anyway, yeah. Manufacturer. Who is going to check that this is really being done? Who is going to prevent? And that's our major concerns with these guidelines. Is this not going to be a tick-the-box exercise? How is this going to become implemented in practice? This is really key, because currently, what is going to prevent us, our consumers, to be still swimming in an ocean of unsuitable products? So this is for us really key. And I would just like, in terms of enforcement, to mention that I don't necessarily compare often the United States as being a better system, but in the United States you have a Consumer Financial Protection Bureau that has 1,500 staff, only to protect consumers of financial services. I think we are far away from those figures when you add the different consumer policy officers in the ESAs. So this is certainly something which, there is a long way to go. And so the message number one is make this a reality. It's common sense. It's motherhood and apple pie. Why do we need still to insist on that and to give time to the companies to implement something that should be obvious?
Thank you, Monique. I think certainly on the number of people involved in consumer protection at the ESAs, that we are far shy of the 1,500 you mentioned in the US. But of course, we need to be fair, because we have a system where we are in a lot of cases such as this, we rely on the resources of national consumer supervisors, and then we are probably comparing slightly better. The challenge for us is to ensure consistency across the single market, and that would possibly require a little bit of strengthening of both the resources and the legal powers of the ESAs. But we are not talking about the ESAs now. Let me turn to Matthew. Is it really common sense and it's easy to implement, or do you really need more time and more understanding and the sort of build up to be able to put this into practice, to meet the expectations?
So absolutely common sense. I mean, first, just a quick thank you, Adam, for the invitation. But just to say, I mean, I very much welcome the framework, and I think it's a sensible way to manage conduct risks for a big firm. It's, you know, a good way to get good consumer outcomes and to manage your conduct risks. And it's about doing the right thing for the consumer. But as you alluded to, and I looked up some of the statistics, it costs a lot of money if you get this wrong. So there was this recent study by the CCP Research Foundation that said and this is a staggering number, the conduct costs of the largest banks between 2011 to 2015 were £252 billion sterling. I mean, that's a massive amount of losses. You think about all the recapitalization that's been going on of the banking system. If you think of that money had stayed there. And Morgan Stanley, alas, predicts there'll be another $50 billion of conduct costs in the next 2 years. So so I think having a good product governance framework is a key element of getting that right, and it makes good sense to do it. We've done that at Lloyd's. The FCA approach to treating customers fairly has obliged that. And what I thought I'd do is, you know, talk a little bit about the practical side of how to make that work, how to make the enforcement work from the inside, if you like, from a compliance officer, and maybe two things about policy, governance, and how to monitor. I think you will be expecting, and Cyril said, that all the firms will develop a policy in how to implement this. And if you really want to think that through in practice, what we say is that each product has to be a senior manager who's the product owner, who has to do a risk assessment of that product and bring it through the product governance process. We're both a manufacturer and a distributor, and we really look so there's an interlock. You not just design the product, but can you sell it safely? And that risk assessment needs to look systematically at the different types of risk. Target market, yes. Product design features, the sales process. What we also look at more and more is operational risk. All right, you're doing it in a way you think is fair, but if your digital system can't handle it, or your telephony operators, they're not enough there in times of stress, that's a problem. So have a good policy framework. A first thought I'd have. Secondly, the governance. Who's making the decisions? Who's doing the challenge? In our bank, we do that at a very senior level. Our product approval committee has got our head of retail banking, our head of products, the chief risk officer, chief compliance officer, head of internal audit, and we want to signal to the staff, we take it very seriously, but you also want to have people have the authority to stop stuff. And we've done that. We've said, no, actually, we're going to pull that product from the market because we don't think it's safe, or you need to amend that product. So having a really vigorous oversight and challenge within the governance, and I think that's part of the framework of the POG, if I read it correctly, how it cascades up to the top of the bank. And lastly, how do you monitor this thing? How do you make sure that it's working in the field? And here what I would suggest, and it's not perfect, is that trying to have some quantitative rigor about how you assess conduct risk, if I can think of it from a risk management point of view, and try to bring that in the product space makes sense. And I'll give you some tangible examples. So target market, really be rigorous about what is my target market, how many do I expect to sell, and if you're selling hot to old people or people that aren't in your target market or selling a lot more than you expect, have a trigger that's going red for you and saying, what's going on here, so that you can have the rigor around that. We also will have triggers and targets around complaint levels. If the complaints per 1,000 customers is going above certain levels, we'll say, what's going on here? Let's do some root cause analysis about that. And thirdly, what I think is a very useful tool, and somebody mentioned it, it might have been Klaus or somebody, mystery shopping is a good tool as well. And I know consumer groups mystery shop banks. We like to mystery shop ourselves to see how is our compliance working. are we doing what we say in our product oversight framework? So having the good policy framework in line with this common sense, but making it bite with having senior people to operate it, and also real rigor in how you police it and check on it, I think means that the POG in force can be a very effective force for good.
Thank you, Matthew. Let us open up the floor for possible questions from the audience. We have got roaming microphones as we had before, so if somebody would like to make a comment or ask a question from the panelists, the request is that please identify yourselves and your affiliation so that we know where your prospect is.
My name is Marian Moscoso-Osterkorn. I'm representing a consumer group from Austria. I very much welcome this implementation of this conduct framework, and also that it is well supervised by the national authorities. But moreover, I think it will be necessary that you will have a continuous feedback from the consumer side. And I'm a little surprised that I heard that a platform which could have functioned as a feedback platform, the financial service user group, which was part of or is part of the commission or is implemented at the commission level, will be dismantled. I'm a little surprised about this, and I would like to have some maybe your point of view on this case.
Well, it's a question, I guess it's a question to me, and it's very, very difficult for me to answer, as the financial service user group is a group run and supported by the European Commission. What I can, and this will not be a direct answer, what I can say is that as far as the ESAs are concerned, so we are concerned, we have, as you probably well know, we have a statutory consultative body which is called the Banking Stakeholder Group, and by law, 1/3 of this group needs to be comprised by consumer representatives, and this is in place, and these groups are functioning really well. And given that we are expanding the activities of the ESAs towards consumer protection issues, joint products and individual products, sectorial products, the significance of this consumer representation to provide feedback and views on upcoming work is becoming more and more important. Now, for your specific question, I really don't know the answer or the background of any changes relating to the FSUG. We have colleagues from the Commission in the room. If they are happy to give some answer, I would be pleased to pass the floor, but I'm not in position to, and this is not political correctness, I really honestly don't know what the background of that is. I don't know if Olivier, no? Okay.
Can I react?
Yes, please.
Because Matthew, you said that implementing these requirements costs a lot of money. You didn't say that? Sorry. I thought that you said that.
I say when things go wrong, it costs a lot of money.
Then I agree with you.
So I'm saying over the last 5 years, banks have got it badly wrong because they've not had a framework like this, and it's cost a lot of money. And so actually investing in this, the amount investing in this, it'll require something. You pay for your mystery shopping, you have your controls, but it's much better for the customer, and it saves your shareholders a lot of money.
I'm happy that you say that.
So, in other words, the enforcement fines are making some magic.
I mean, the enforcement fines cost a lot of money, but it's paying back and paying interest and going back in time and having big administrative expenses. It's the right thing to do, but it's a lot of cost. Like I say, £252 billion is a lot of money for making mistakes in the past. Better to stop making the mistakes.
Thank you. We do have somebody there who's asking.
Yes, thank you. Josina Kamling, CFA Institute. I want to ask Matthew Elderfield a question. 2 years ago, CFA Institute, together with the Economist Intelligence Unit, did a research on let's say, conduct risk and conduct appreciation and ethics in the industry, in the financial industry. And one of the things that really struck me was everybody said, no, we totally agree there needs to be an ethics code, and we subscribe, and we want to behave ethically, etc. But when people were asked, well, if you had to be slightly sort of flexible when it's concerning your, when it might affect your career progress, more than half actually said, well, then of course we would be flexible. How do you deal with that when you look at specifically product oversight, governance, compliance, etc.? Thank you.
Yeah, I've seen that. So this is basically people feel to get ahead they have to compromise their ethics, I think was the survey. And I think to have a comprehensive approach on conduct risk, it needs to get into culture as well. And product oversight is one part of it, being tough to make sure that you've got the right products. I don't anticipate the third topic, but the incentive framework is very important. We're going to talk about sales incentives, but the other thing, which I think is healthy, is remuneration adjustment has come in, which is basically to say, if you contributed to the 250 billion mess up, but you got paid a bonus, you got to give your bonus back, mate. Sorry. So, you know, making people realize that there's consequences after the fact if things go wrong. I think that cultural journey for the banks and the insurance companies will take a lot of time. There's a lot of ingrained muscle memory, if you like, of selling a certain way, and it's going to take a while. In that respect, I think it will take a while to change. But I think if you reinforce it with good controls and good incentives, and one thing I think is healthy to do is ask your staff anonymously how it's going. Did they feel under pressure on sales? Did they feel they can escalate problems to senior management? And that's a good temperature gauge to see whether your cultural progress is making progress or not.
Thank you. I cannot see further requests, so I think we might want to move to the next topic, the KID document, the Consumer Information Document under the PRIPS regulation. And again, I would like to emphasize that I think it's a coincidence that this particular day of consumers is coinciding so exactly with the turmoil around this legislation in Brussels and specific decisions. So we would like to avoid trying to resolve that. I think because it would be too much of an ambition for 30 minutes on a Friday afternoon. We have worked on this much more elaborately, so I will try to avoid that. What we will try to do is to assume that eventually there will be a KID document, and it will be put into place, and it will be part of the regulatory requirements, the formal regulatory requirements. And again, here we are talking about a product which is much stronger in terms of its legal powers because it's in a regulation, and we have designed this very short document with the aim to provide cross-sectoral, relevant and good quality information to support the decision of consumers who are buying these products across the sector. So my question relating to this, and it will be the question for the audience will be slightly more philosophical than very practical, attached to one particular aspect of this document. The question we would like to ask is, how useful do you think that such a disclosure document is, which is providing this sort of relatively uniform cross-sectoral information on these products? And also, how useful do you think specifically this KID document is from a consumer protection point of view? So please use your little gadget again and try to cast your votes to see the general mood or the general thinking about the usefulness of such a document. Yes. Well, this is interesting. I would say that this outcome, at least in the room, indicates some skepticism, some general skepticism. And probably this is an understatement, but this is interesting. I don't know if we need to formulate this and send this to the legislators, but on a more serious note, it is clearly signaling that there is a lot of controversy. It's something that divides the views very strongly. So it's also a reflection of how difficult to get this right, how difficult it is to design such a document and to really make it useful. So let's try to have a Let's again try to have a discussion on this specific product, on this specific requirement, and again the same. We would like to have the same prospect. First of all, this time I will ask Matthew to speak first, because of course in the course of designing this document and in the course of the legislative process, we heard a lot of complaints from the industry, from all corners of the industry, that the document is not useful. That the document is extremely hard and expensive to implement. It requires a lot of time, and I would like to see from your point of view, from a practitioner's point of view, who of course followed this process very closely because it will be a definite requirement. What your take is on actually implementing such a thing? How useful you think it is going to be to provide useful and comprehensive information to the clients on investment products. Then we will come to Monique to try to see what the consumers are expecting from these, and then we will finish with Cyril trying to tell us again how the supervisors see this, how optimistic you are after seeing these divided views on the usefulness of such documents. So please, Matthew, the floor is yours.
Thanks, Adam. And I guess this is a hot topic with the parliamentary actions, and I won't pretend to be an expert on all the details of the KID. I think there's some good points out there. I've read what Insurance Europe has said, and the ABI. Also think the Parliament has this reasonable point about if you're making forward-looking probabilistic scenarios, you really need to see the downside risks in there. I guess a few things. I suppose the immediate issue, I think, for the industry is a timing one. In theory, the PRIPS regime is due to come in at the end of the year, so there's not a lot of time. I think it's unfortunate about these last-minute hitches. It doesn't give a lot of time to prepare. And I think what it means, actually, if the time is constrained, it'll have the unintended consequence that national regimes and banks will probably retain the old documentation that they had already and add the KID on top. And you miss an opportunity to edit down and to rationalize and to simplify. Because until you know exactly what's going to be in the KID and what the format is, you can't compare it to your existing domestic obligations. And ideally, I think we'd all like to try to slim down as much as possible. So I think that's one challenge. And there's a lot of complicated open issues like the multiple options, and you're going to have to give lots and lots of KID versions. So I suspect it would be useful to have a delay of a year or so to work that through. And maybe to get to the next point, which is when I think about disclosure as a former regulator now working in compliance, I do try to think about it through the lens of behavioral economics, which we've heard quite a lot about. Monique mentioned it earlier, and Klaus did as well. And so I think better comparability is really important. And I think particularly on cost, particularly right now, because we're in this low yield environment for the market, and in that environment, high charges can really eat up return for investors. So having more transparency about charges, I think, is a valuable thing. I know there's complexity in exactly how you do that and what you present. That's a good goal. I also like the idea, speaking personally, again, of the standardized risk scoring. Again, there's some debate about, do you compress credit risk in with your market risk? I know the ABI and others have reservations about that, but I think that's good. All that said, I think, again, from the behavioral economics, we have the lesson in the financial crisis that markets aren't efficient. We also have the lessons that consumers aren't Mr. Spock. Consumers aren't Vulcans that kind of process information super efficiently. Consumers, we're all consumers, we're humans, we have cognitive limits in how much capacity we can absorb and process. And so to unpack that a little bit, I think on the face of it, the idea of the 3-page limit kind of sounds like a good idea, but we also know, and the FCA has been very good at this, the physical layout and presentation of a document is very important. A 6-page document with a lot of spacing in it is probably better to be absorbed by a consumer than a 3-page document that's super dense. So I think being more thoughtful about the very end product of the kid and how easy it is to digest it, if you like, mentally digest it and absorb that is going to be very important. What I think, and I don't know if it works with the EU process, I suspect not, is that I think there was some testing of different formats at early stages. I think trialing with your customers alternative formats and testing back what they understood is a good way to go. Maybe if there was a year's delay, some of the firms could do that. So I guess to sum up, I think it's a good initiative. It's going to need some more time to iron out some of these complexities. And at the end of the day, let's apply the behavioral economics lens of what information can the customer absorb and have we presented this in the most effective way to make that work.
Thank you, Matthew. So, if I sense you are in the supportive camp, but you argue that it needs to be done well and leave sufficient time for this. I have to say that on our side, when we were in the process of designing this famous 3-page document, we felt very frequently that we just don't believe how on earth it takes so long to develop a 3-page outcome document. But as you point out rightly, when you try to create something which is really, really dense and provides the necessary info in line with the what consumers are able, willing, and happy to digest, it's not a straightforward. It's not a self-evident endeavor. So we did have that feeling, and of course we feel a little bit sorry that what we presented and what we thought was a good product has not gained sufficient support to be put in place straight away. But as we expressed it before, we would be happy to try to address the concerns and work on the basis of what we have and see how we can actually complete this, which we also feel that it's critical and important. But let's see, Monique, what consumers think of this, what consumers expect from this document. Is it a good idea?
Absolutely a good idea. I'm quite shocked by the vote, by the outcome of the vote.
Of this one, or the Parliament?
This one, because in fact, KID exactly addresses the fact that disclosure documents are too long. So it tries to correct the dysfunctioning of the current system, and still you vote against key ID. So maybe we need a little bit of financial education in this room or so, I don't know. Such a document makes it possible for consumers to compare much more easily between different products than before. And that's what we mentioned in the previous session. If you want the consumer to be switching or to choosing the better product for him or her, then you need really to make comparison more easy. So we certainly welcome in principle key ID. And in fact, it's the basic. It's sound, easy consumer information, which is legible, which is intelligible. So what's the problem? And we believe that it has taken much too long to come up with it. And the only explanation, and now let me be a little bit provocative, the only explanation is the resistance by the financial sector. Because there is no reason not to make this available for consumers, because it's a tool for competition. It's a tool for making better choices for consumers. Now, we don't say that this is necessarily good as it is. I mean, we welcome it, and we believe, though, that it can still be improved. For example, when it comes to the costs that have to be displayed, the total cost should also take into account special fees that you need to pay, for example, if you have a guarantee or so. We also believe that the document is too fragmented according to the sectors, so you don't have a harmonized approach depending on the type of product. We also believe that the future performance requirements need to be a little bit better calibrated. So for us, we support certainly the key ID, and happy to contribute if you still would like to improve it. We would like it to happen quickly, even if it takes time, but the earlier you start with it, the earlier you get on with it. But what I would like to say more fundamentally, if you really want to help the consumer in his choices, I would encourage the ESAs, the national authorities, banks, to engage into making simple products available. Most of the financial products are much too complex with regard to the need of the average consumer. That's why you need so many pages. We don't want standardized products, all across the board. There needs to be choice between different types. But make a simple product available, the plain, le produit blanc, as you would say in French. That would be something that would be a consumer-friendly initiative, easy, plain language, easy to understand, easy to sell, easy to purchase. That would be certainly something that consumers would welcome very much, and that would help also boosting the market and its transparency.
Thank you. Thank you, Monique. I can testify that indeed, of course, the financial sector was very forthcoming with representing its voice with respect to the development of this. But I can also confirm that indeed, as Matthew mentioned, we did consumer testing and focus group testing and other similar exercises to really try to gauge the views of consumers. Maybe we have not done enough. We will see, but clearly we are of the opinion that we will have to drive this to a conclusion. It is an experience to us that the ESAs, I think we have demonstrated that we can produce 100-page documents, very good quality documents at relative ease. But when it comes to a 3-page document, we find it very difficult sometimes. But we will continue as you suggested. Cyril, Matthew mentioned that there are already similar national attempts or similar national documents in place, standardized information provided to consumers on investment products. And this, of course, this being a European standardized format might complement or replace or somehow overlap with these. How do you see this from a national supervisor's perspective when something like the KID is conceived and being designed and put into practice? What your expectation is from this product?
Well, maybe I can share my experience as a board member of ESAs, and you haven't been very explicit in the amount of effort I think that the 3 ESAs and their staff and their members have put into getting to one document. So the elaboration meant a lot of work and dedication. It was very painful. And then getting it across the line, getting it voted exactly in the same terms by 3 boards has been extraordinarily difficult. It's been like herding cats, I think. And so I think that it's you mentioned industry resistance, but I think we at ESAs found it very difficult to find a common kid that we could vote at the 3 boards. Now that we have succeeded into doing that with immense effort, then the Econ Committee and the Parliament and maybe Council, the product is not good enough for us to adopt. And so I'm a bit pessimistic. I'm not sure that we will be able, at the 3 ESAs, to come up with a revised document that will be adopted by the 3 boards. Actually, I am not sure. And I think it's maybe because the intention is, it may be just inherently too difficult to find one document for all financial contracts in so many domestic jurisdictions. I think there's a bit of course, this is driven by the single market, and this is what we have to do. This is why we're set up as ESAs, and this is also the RTS is that's our mandate to produce it. But maybe it's so difficult, and maybe it cannot be achieved because a single market is an ideal. It's a legal construct, but it's only part reality, and it's not part reality because of that people are fighting against it. It's because it's just the many markets are distinct. Jurisdictions mean something, and also because I think that these various sectors and the various products are so diverse, and trying to put everything in one place maybe cannot be achieved. And to put UCITS and multi-option in one place with products with mortality risk, with things with guarantees, it may be the case that the variety of products across sectors and across countries just cannot find a home in one 3-page or 6-page document. And is it, I'm going to shock you again, is it so terrible? Is it so important that a citizen be able to, a citizen that want to invest in financial product and has the intellectual capacity to understand products that coming from different legal systems, different countries, different providers that are not based on their soil mostly, that they have the same document. I think if you're sophisticated, if you're sophisticated enough to have recourse to providers that are outside of your borders, you should be sophisticated enough to read a document that is tailored to the provider. So this may not be popular, but I think that that may be the end result. And I also find that it is a misnomer to call these contracts products. These are not products. I'm sorry. I know this is a term we use. They're financial contracts. Insurance, you have insurance contracts. A security is a contract, and a contract is complex. It depends on the legal environment, and this is not a potato, and it will differ. And the way when things go wrong, the way you will the complaint will be heard, and you can make yourself, the justice system will adjudicate on the right and obligation will differ from a common law country like Ireland to a civil law country like you find on the continent. So I think there's been too much talk about simple products. These are complex contracts. If consumers, if there was such an interest in very simple contracts, they'd be selling like hotcakes, and you would find among the thousands of financial firms, you would find a sufficient number that would provide these very, very simple products. If that met the need of consumers, they would crowd out a complex product, and this is not what we're seeing for very good reasons.
Thank you. Thank you very much. I think you had a very strong view on the merit of the kit, and also you made some, I think, some implicit predictions of how optimistic you are that this will eventually become a success. And although it's not the role of the moderator to jump into the debate, but I cannot resist the temptation. I think my argument to sort of defend the concept of the kit so that it's a cross-sectoral, and we tried, and the legislator tried to give this mandate, and we try to come to in a very painful way, but come to a single document, is the potential that the same economic risk or the same economic exposure to an investor can very easily be structured into a contract of a structured deposit or an investment product or an investment-linked insurance contract. And so the client would be exposed to the same underlying fundamental economic risk, no matter what the choice of these contracts are. And of course, the concern of the ESAs is that in case the information provided is inconsistent, let's put it this way, not necessarily identical, but inconsistent, then there could be a regulatory arbitrage between the different types of contracts that are chosen for the same given risk. This is just one argument which is underlying the concept of trying to design a single information document. But on the other hand, of course, you are right. These can be significantly different contracts themselves. The rationale is much more based on the underlying economic exposure or economic risk.
So maybe just one more word. I understand the intellectual argument. I think as an institution, the Central Bank of Ireland has played gallantly, and we will continue. And if it comes back, we will work to build a revised kit. So we are playing the game, and with as much investment as anyone else you've seen, and we'll continue to do that. What I said was more a personal view of why this has failed, but it doesn't mean that we won't continue as an institution to try and make it happen.
Thank you, and I really appreciate
because
I really appreciated your views on this, because that's why we are here, and that's why I think we could see in the vote that there was a reasonable level of skepticism expressed in the answers.
Coming in on simple products, and just we had that one of the earlier surveys talked about most important thing is cost, and we've had an interesting experience where we had I think generally a lot of banks have actually tried to simplify their product range because it gets you into trouble if it's too complicated. So there's an incentive to that. I think there are some esoteric ones that are right to be concerned about. On insurance products, for example, we've done some simplification where we've taken exclusions out to make it easier to sell and more straightforward. What happens is that in order to afford that, your price competitiveness goes down. It's very interesting. Comparison websites where people look strictly at cost, it doesn't tell you the full picture, because that insurance product that seems really cheap, it may have as many holes as a piece of Swiss cheese underneath it with all the exclusions behind there. So having cost as the #1 priority, you need to have a well-rounded picture. And I think somebody mentioned they were going to do some work on cost comparison websites. I think that's a useful one to say it's not just about the cost, because if you want to get the simple products, you probably have to pay for it a bit more.
I agree, that is indeed, as Cyril mentioned, that is indeed the challenge for designing such a 3-page or 6-page simple document. That by definition this cannot reflect all the complexities of the contracts underlying the different products. So this is indeed a challenge. But let me open the floor to potential questions from the audience and comments before we move on to the third topic of sales incentives. There was one request there and one here, the third one here. So
thank you. Thank you. Thank you.
Can you see if it has to be a green light, which shows
it has a green light?
Okay.
Yeah,
it's working.
Here we are.
Yes.
Sorry. My name is Wijnald van der Beek. I'm from the Netherlands Authority for Financial Markets. I think your questions on the kit, usefulness of the kit, may have misled a few people a little bit, because it said, do you think this document is useful because all consumers will now understand everything about financial products? I'm paraphrasing. I don't believe that. I think the kit is extremely useful, but I don't believe that all consumers will now understand all the products and make suitable choices. I think the kit does a couple of extremely useful things. First, it standardizes risks and performance across sectors for similar products so they become comparable. Not only for consumers, but also for comparison websites, for advisors, for supervisors. And this will have, combined with other initiatives, will have a combined effect that will have a very positive effect on the market. For example, it will make very clear for financial institutions which of their products have high risk and low reward or high cost, and will, in that sense, in combination with the POG requirements, will have a, I think, as already the gentleman from Lloyd's indicated, will have the effect of simplifying product ranges of financial institutions. So I think if you would rephrase these questions and say, A, is the kit a useful instrument, you will get a lot more yeses. But you have then to add in all the other effects that are required and which will contribute to the entire picture. Thank you.
Thank you. Thank you very much. And needless to say that we take all the blame for phrasing the question in the way we phrased it. But what you are pointing out is correct, that we set the bar very, very high in the questions, and probably all those expectations that were in the question are a tall order to meet. But we had other questions and comments. So if you could have a microphone to the lady and the gentleman.
Hello? No,
yes.
Okay, it works. I'm Estelle Piazza from Groupama. I was just wondering, as this chart is postponed, when do you think it will have to be in place? Not in the 1st of January.
Well, I think my answer would be, I don't know, but I think we heard different views on this from the panel. Matthew mentioned a good year or so. I think Monique was a little bit more demanding.
Yes,
but it is down to
it
is down to the legislators to decide, and for us to redesign whatever needs to be redesigned to get the support of the legislators, and then. As we all know, the effective date is always one of the last things that is decided when
it won't be the 1st of January.
Yeah, but so it is clear that at the moment, because of the legislative steps, we don't know for sure. It is also clear that sufficient time needs to be provided. Views are different on what that sufficient time is. We will see. I don't know if the panelists would have a better crystal ball. Next question.
Bruno Gabellieri speaking again. In the last year Consumer Protection Day, we were in a big debate about kids, and I was asking the Commission and the supervisor about the legal value of this kid. Because as Matthew said, and as Cyril said also, if there is a tool of simplification, it's a huge challenge in order to replace contracts and so on. If it's a question also of responsibility of the insurance sector or pension fund sector or banking sector, it's another problem. And I would like to know if there is a study about that on a legal basis, about this value on the legal way of that.
It's a contractual document. Sorry? I guess it's part of the contract. So it's part of the contract. So it binds the company and it binds the consumer.
Matthew, have you studied this?
I wasn't quite sure the question, but I think that would be my answer. If you're a company and you're making a representation or you're putting facts in front of the customer to say, this is the description of my product, this is what I've invested in, then you have to stand behind that. I mean, you get the other things that are slightly more complicated. You're making projections about what you might have as a return. I suppose you've got to make sure you've done your homework and you've done that on a reasonable basis. You can't be able to guarantee anything, but I think it's part of the terms and conditions of the product. Yes. I'm not that's not a strictly legal answer, but it seems to be the concept.
Yeah, but it's a key information document, so it is part of the representation of the financial service provided towards the customers on informing the customer on what the product is and what the exposure the customer is buying. And I will turn to Cyril from an enforcement perspective. What the interpretation and the expectation is.
Well, I think it's more for if consumers believe that this kid has not been misleading and they want to make a case, then again it will depend on the legal environment, and this is where we go back to the fact that we are in different domestic national legal environment. And if a French consumer goes to a French court and say, this document was given to me during the sales process, and in fact the product turned out differently and it was actually misleading, then the case law on which the French judge will rely will be very different from the case law and in fact the legal principles on which an Irish judge will rely when faced by the same case brought by an Irish citizen. So the legal force of this document will be different from country to country because in the end we are dealing with national law and national legal systems behind this European text, underpinning that you get to national law. It's the same thing when you're harmonizing lots of things, saying for mortgages or loans, but then insolvency law will be different from country to country, and so the mortgage may look the same, but in fact when things go wrong, the legal recourse will be operated very differently in different countries.
Thank you. Monique has got a point to make, and we have a last question from a gentleman there, and then we will move on to the next topic because we are sort of running out of time. Yeah. Please.
I wanted to speak about to react also on the fragmented approach. This is really the Achilles heel of the whole system, not only in the financial services area. You have a European legislation and you have different rules, different legal environments for enforcement, different authorities with different resources. And so that's something that has to be taken into account all over the place. I wanted also to say, to refer to your sophisticated consumer, I think that it is key to have a key information document to allow new intermediaries coming on the market to make it easier to help the consumer who is not sophisticated necessarily and who should not be, to go cross-border. So this is it's a tool of competition.
Thank you. Let's see the last question for this topic.
Andreas Widegren from the Swedish Structured Investment Products Association. First of all, thank you for exactly that comment. I have a question concerning simplicity that you're talking about in sort of the limitation of the amount of products which are provided to consumers today. As I read MiFID II, taking consumer needs and investor needs into consideration when advising on financial products, simplicity is not what you're looking for. You're looking for adaptability and the adaptability of products to the consumer needs. And it seems that we are in some way looking at a limited universe of financial products which we are offering to these consumers. However, if we're looking at structured products, for instance, and we're looking at what's going on in private banking today, we can actually create products which are bespokely made to the needs of the investor in front of us. How do you view a future like that, where we're creating products, financial products, which are made specifically for your needs, your risk willingness, and offers transparency through the KID, which we welcome. We love PRIPS. PRIPS is the best thing that ever happened to the financial products industry. It will create a great future of comparability and transparency, questions which are now off the table, so we can go on discussing the needs of the investors and how we can fulfill them. Thank you.
How can we answer this very quickly?
Most products many products that are on the market are not at all designed to meet consumer needs. They are designed to diversify the market and to position oneself. Many consumers are just having a very plain need, having a saving for retirement, being insured, sometimes they want to take a risk, so very often they don't know that they take a risk. So this is something we do not want necessarily to have a lack of choice for consumers, but we want consumers to be able to engage into products that they trust. And sometimes simplicity is easier to trust than over-complex product. I don't know whether you saw the slides. All those products that have given rise to scandals were over-complex, could not be understood for even some of the more sophisticated consumers, and they were pushed into combinations that were totally not needed for their use. So.
Okay. Any comments from you? No.
I mean, I'd say, bespoke products for high net worth, customers, very sophisticated, I can see that. But I think, at least for my institution, we've tried to simplify our product range, that, that the guys in products and in marketing like to invent lots of bells and whistles, but it's hard to keep track of all these things and to sell them safely. And you're trying to explain to your sales force, here's the product, but if there's 3 variations to the product or 10 variations to the product and it's very complicated, I think it's just hard to do it in a safe way. So, and it becomes very operationally complex as well. So I think for the large part, not exclusively, I take the point, for the large part, a simpler product set is safer both for the customer and for the bank, in fact. But you can have your bespoke for a subset.
Okay. Thank you very much. I think we are at a turning point because we started the session late. We still have a few minutes left from the session, but we are reaching the original timeline of the conference. So what I suggest as a way of compromise is that we have a really quick round on the last topic of what we have. We also have a question. We designed a question, and it's about the remuneration requirements, the sales incentives, to be very specific. I think we have already touched upon on the topic. We have a question for the audience, and then I will ask a very quick round of comments, very briefly on the expectations with respect to these requirements, and they will go onto the screen from the panelists, and then we will try to conclude. So the question is, do you think that the remuneration requirements of the ESAs will be effective to bring about a better consumer outcome? And then again, just to remind you what these requirements are, they relate to the design of remuneration or sales incentive policies, the documentation of these incentives, the proper documentation of these incentives, the accessibility of these documentations to consumers and the supervisors, the role of the management body in deciding the remuneration policies, and the monitoring system which is put in place to actually assess that these policies are adhered to by the institution. So these are where these requirements are trying to bite, and we would like to see how optimistic you are that such requirements, so that rules designed to be supervised, how optimistic you are in terms of the effectiveness to bring a better consumer outcome. And I think the vote is open, and I can see quick progress to a conclusion. I think we can close the vote. Okay, so here the outcome is very clear, that the majority of the audience says that these requirements have got a good chance to become effective, but they would need to be well supervised, if I understand correctly the outcome. So what are the chances of good supervision of remuneration guidelines? Let's see.
Can I speak?
Yes, you start. Yes.
Of course, the principle of remuneration requirements is very much welcome from the consumer perspective, but we believe indeed that they are much too vague. So I understand why answer number three has been voted in a majority, and we believe that there should be much more details given in what type of requirements we would expect. And for example, we could be inspired by the experiences in the UK or in the Netherlands, where commissions are banned, and which they work very well. The system works still very well. We also believe that there should be requirements that explicitly say that any remuneration of staff should be product neutral, should be based on overall long-term performance of the product, and should be also linked to overall consumer satisfaction, in order also not to give the wrong incentive on staff. And also we believe that there are current practices that put pressure on salespeople that should be banned. So overall, we believe that it should be much more detailed. It should be much more defined what is allowed and what is not allowed. And of course, as a consumer organization, we believe that there should be a ban on commissions for investments.
Very clear message. Thank you. Cyril?
I think you've asked a very Irish question. So when things go wrong in France, people say, what is the state doing? Just, what is the government doing? When things go wrong in Ireland, what is the central bank doing? What is the regulators doing? So here, it's just, for this to succeed or fail, it's the central bank's fault, because of course if things go right, there's no one to tell us that we did the right thing. That being said, I can only agree. I would say I would agree that very vague. I don't know if they could be, if at European level they could be something else than vague, but I do agree that to make them bite, you need to transpose them in a way that are explicit and binding. Now, of course, it's very difficult if only because you're now talking about terms of conditions of staff. They have contracts. They have existing contracts. So you can't just, it's much more difficult to kind of move the terms and conditions of your staff than to change the terms and conditions for new products. And so that's, there's a discrepancy between the coal-face reality and these high principles. I think also that we need to differentiate between products where people have to lay out money and lending. Actually, they're given money. Right? So you need really binding rules, and it's just the relationship doesn't work the same way. If you know, you go, as people went in Ireland, you go into a branch of a bank and you say, I need to borrow 100 for my mortgage, and the person is incentivized to tell you, I can give you more. You know, quite different from people trying to push, you know, more spent on your part. So then the question are embedded into affordability rather than a question of, you know, pushing. There's lots to say. We are late, so I stop there.
Thank you, Cyril. Matthew, you have been grappling with changing incentives within an organization with all the practical complexities of contracts and a variety of products. So how optimistic you are that this is one way of addressing the problem and it can be successful?
I think this is absolutely crucial, and I think the whole incentives and remuneration area is a very important lever an organization can pull in a careful way to bring about cultural change. I think the EBA's GL22 on remuneration and clawback is already a really important piece of public policy. This is a kind of sensible element around sales, because we've seen some bad practices. My organization 3 or 4 years ago had some bad practices. There's a very, I won't mention the American bank that in the news right now about these things, and I thought the guidance, it's quite high level. It says have your policies, don't create a sole link to sales, don't favor products. The background section of the paper I thought was very good because it draws out some examples. The bad one is obviously, you say to your sales staff, you get 1 point for selling a credit card, you get 100 points for selling a complex structured derivative product, and every 100 points you get to go to Bermuda on holiday. Well, they're going to sell a lot of structured products, you know. So you want to make sure you don't have a point system that skews incentives towards really complicated products, and that's my interpretation of the no sole link to sales, no favoring products. That's quite high level. I take the point, but I think that's quite powerful. So looking at incentives is something we've spent a lot because we've really messed it up in the past, and we're trying to do better on that. And so what do you need to do from a practical sense? Really look, are you putting all your pay on your colleagues that have sold the most? And are you really taking account of controls and their attitudes to risk? And are you monitoring them through outcome testing and mystery shopping? So I'll keep it brief, but I think that's very important. In fact, at Lloyd's, for what it's worth, we've gotten rid of sales targets entirely. Even with controls, even with balance, even with offsetting, we've said we just don't want the targets because it lends people just to push product even though the customers don't need it. So we say if we do well at the corporate level, you get some extra money, but we're not going to give you more money just the number of products you sell based on customer service. That's made our staff much happier, and that's made our customers much happier as well. So this is a sensible next step to my mind, and I think firms themselves, I would suspect or would hope, would have policies around their incentives to control these bad points and incentive practices.
Thank you, Matthew. I think that was a really good point to close the discussion. I think what you outlined shows that the industry, or at least the industry you are familiar with closely, has gone through a fundamental change of the internal culture and the way business processes are set up. And I think it is encouraging. And if the work of the ESAs had played any role in this, then we are very, very proud. But also, I think all of the three interventions pointed out that there are very daunting challenges of implementation of any such requirement because of institutional complexities. Some arguments can be made for more detail. Some arguments would be against more detail because of inconsistencies between different product lines and different legal systems. But it is clear that implementation of such a requirement is not straightforward. But thank you very much for your comments, your participation. And I'm afraid there will be an audience detriment caused because I will not open the floor for questions, given that we have really run out of the time initially planned for the whole conference. Although again the panel was within the limit. So I would like to thank the panelists for the excellent comments and contributions. And then I will try to extend the thanks to the audience for your keen interest and good interaction with us. It was, as always, it has been very useful and enriching for us. I would also like to thank the colleagues of the three ESAs who prepared this conference, specifically colleagues at ESMA who this year took the burden of or the pleasure of organizing the conference. We will of course continue the tradition in organizing this event. So you will hear from us with respect to next year. And I would like to wish everyone a safe trip back home or a good weekend in Paris if you decided to stay. And I would also like to offer you the possibility to continue discussions around these three interesting topics or anything else related outside of the room after we conclude. And I am obliged to make one housekeeping note, which is that I kindly request all of you to leave the gadgets, the voting gadgets, here within the room and don't take it with you. That was a request of the organizers. Otherwise, we are going to incur some huge financial expenses towards the conference organizers. So again, thank you very much for coming, for participating so actively, and see you next year.